This is London with Bitcoin Spike and VIP Trader. Apologies for the microphone. In terms of the open, was just looking at the equation in terms of the potential for Tesla to have an executable short under the 20 moving average on the weekly, to have an executable long in terms of that litmus test over the 20 moving average on the weekly. What would be that deciding factor in the rationale based on New York Institute of Finance? This is London, former hedge fund owner, private, non-SEC, not financial advice. New York is open. And to the extent that you're looking at Tesla with a 1.42% rather open to the downside, looking at NVDA with about a 0.7% drop, looking at the NASDAQ off a bit today. The key focal, the same as yesterday, the specific action underneath the 20 moving average on the weekly. And yes, looking at the details of a potential carry trade at the litmus test on this 20, be advised of the following. Just generally, collegially, if we were to look at this, a 20% potential move to the upside if bulls choose to reinforce price action to the upside, to that top side band. All right, that second standard deviation. Remember yesterday's stream wherein we took a look at the 50% completion versus the 100% completion. The probabilities thereby increase if you are looking at a 50% completion versus a full 100% completion. But this specific level has reinforced prior hereto, and note the importance of our capital control line, our cap line, the RSI and stochastic here. Let me hide this in the background to give you a better look at this. Understand, in terms of a mitigating factor, we do have that red cap line, which did give us an expectation on the weekly of a reinforcement down to the specific 20 moving average. Without being overly bearish, understand that that 20 does act as a level of reinforcement, okay? And the conditional set under here, most recently, in terms of a really solid trade to the downside, did reward bulls, rather bears, quite a bit in this regard. Looking forward here a bit in terms of a difficulty for the back test, and that was a 21% move. The bulls got actually rewarded here for holding on through a level of difficulty which lasted a number of weeks before the specific launch up, out, and over of the specific bull flag. So when we look at the, guys, if you're looking at the battle between the bulls and the bears, what helped the bulls here? Patterns, guys, the specific pattern that we noted. As we look at the specific patterning in play now, we do not, as a matter of fact, we do not have a clearly indicated slam dunk pattern such as the bull flag. We just don't right now. We are in I'd say a degree of flux as we're seeing a bit of a pickup on price here. And let's back out. But I did think of that yesterday. I wanted just to make sure that you understand that this is a litmus test. And in terms of a carry trade, it has paid very well in the past to execute an over or under strategy, and in line with the 50% probability. Okay, the 50% probability increasing. Let's say a 50% target take, increasing the probabilities of success. I wanted to bring this to your attention this morning as this level, the 20 moving average, is in play. Okay, and noted again the cap line feature, which again gave the warning for the potential contact with that 20 moving average. As you look at the over and under, please pay attention at the over and under. Okay, probabilities generally on a 20 moving average and hitting into the opposite side band, you will see the 20, essentially the 20 moving average being hit with a warning expectation or some sort of a warning event, that red cap line showing that bears are in control. You'll see this dynamic play out with a higher degree of probability, meaning we are red, boom, we've gone down to the 20. You'll see that work itself out with a higher degree of frequency or probability than you will see the specific over or under the 20 moving average come into play, okay, and execute to the benefit of the trader. So mind that particular fact here, without a doubt. Now we picked up essentially that red line here is what, guys? Is and it was nice opportunity. We discussed yesterday the potential. This is on the 3-minute. We'll go through NVIDIA in 1 second, but we hit into the, what, guys, on the 3-minute time frame on open, we hit into the fire sale line. Okay, nice pickup on the fire sale. I would call this, boom, 1.25% 7 minutes into the trade session. Okay, so that's about a 1.725%. What is this? Let me get exactly here. If you maxed out the move, let's really dig into this. You're looking at 1.5% in terms of the maxed out move. And I would just call that as a nice opportunity for a flash trade early on in the day of Tesla. Yesterday, we had this action looking for a breakout up and over. We did get that return to the preceding level of flat bottom support on Tesla. So nice action as we analyze and as we look at our participation in the market. I didn't want to make it too simplistic yesterday saying, look, the market may open down. Will you recover? There is a chance of recovery. How would you structure into, and this is an exact case in point, how would you structure into a market that may offer you a drop right out of the starting gate? Is exactly what we saw today. So while I'm not trying to make things overly simplistic, if you're hitting a high level designed calculative such as our fire sale line, it's worth exploring along with your pattern dynamics that are in play, whether or not the drop on the open is an opportunity to schedule in and take advantage of a trade in the first 5-10 minutes, sometimes the first few seconds of the price action. Is why we focus on the open. We need the volatility to the extent that we are tried, tested, and true on Bitcoin. Okay, that's currently looking at the 20 moving average, bam, as a level of resistance after a nice drop itself. As we're looking at the details here, we just need some volatility. You know this, we need some volatility. So as we're looking at the dynamic, just the dynamic performance over this year of the AI stocks, which have just done great, and we're able to trade those on a crypto exchange. Okay, so tokenized, what do they call them? Tokenized commodities? Not sure, guys. You guys can tell me. Tokenized commodities on BTCC, as we are looking forward to additional, or looking at and seeking additional volatility. NVDA, Tesla, tokenized commodities have come into play, and it's a nice segue for crypto traders to the extent that you would like to dabble in, get your feet wet a little bit with equities. Again, we are tried, tested, and true with Bitcoin. We just are. That's our mainstay. Bitcoin has the volatility of a champ. And when it gets going, if you miss the move, what I see, and this is very important, again, this is London, former hedge fund owner, private, not SEC, not financial advice. Good morning to our VIP, whom we are streaming for. And what I will say is this, as you look at, and this is one distinction that I see just from the seat I'm sitting in, between crypto and equities, when Bitcoin gets up and rocks and rolls in terms of its volatility expression, the equity traders will come around to me after the moves and say, hey, is this the move Bitcoin's going to make? And so many times I look at them and I just am thinking, the only thought I can think is it just made its move, right? So you were focused over on the equities and you missed the Bitcoin move. That is a real dynamic in play I see with a good percentage of traders who are solely focused on equity. So our primary focus is really Bitcoin. And you may say, well, you're every morning streaming the open of New York, the open of equities, etc. I want to say good morning. Apologies for any microphone issue this morning. I'll videotape what you guys, this challenge of this OBS and Rode microphone. It's quite a challenge. But looking at the drop again today, and you understand what I repeat all the time, is that I like quick trades. I like quick trades right on the open. This to me was a beautiful morning. Beautiful morning on a Tesla drop right into the fire sale. Yes, and the opportunity, I put it as simply put as this yesterday. I really put this as straightforwardly as I possibly could. Getting a drop on the open, okay? Getting a drop on the open gives you the opportunity to schedule in. Again, check out BTCC. If you're not on BTCC trading, I really think you're missing out. It is something to take a look at. Longest standing crypto exchange. And guys, I'll plug it or not. If you're in our group, you're trading with our group. If not, check it out. Just check it out. Longest standing crypto exchange, really good guys over there. If you have a problem with the exchange, they are overly accommodating in terms of reasonably, but I will say overly accommodating in terms of making any kind of trade right if there's any problem with the exchange, which to me means a lot. I've seen that issue crop up between guys almost every major exchange up and through, and to including some hassles with Schwab or who all it may be. It's a nice environment to trade in. So yesterday I didn't want to make this, but it's nice to see it reinforced in the market. True? Yes. Yesterday I said what? Well, if you get a drop in the market, what's the percentage chance that you're going to be able to kick in the first 5 minutes? Wham, bam. You got a trade. You just got some, guys, a nice expression of volatility. We can go back and analyze it from a pattern basis. Exactly what are we looking at? Why did we get specifically the drop? What kind of news may hit? What are we looking at technically or fundamentally? Technically means the actual construction of TA on the screen. Fundamentally means what's hitting the news wires, right? What is the development in terms of news related, kind of a more corporate. I do not want to use the word. Let's just say the corporate formalities nearly expressing themselves as they would financially, or in terms of economically, either economic data specific to the equity or Bitcoin, or more broader sense in terms of the overall dynamics of the market, or even external factors, right? Those fundamental concerns, right? That would include a specific potential, anything from the news as it would affect a company, whether that not be, could even be to the extent of geopolitical, particularly economic, effects on the particular asset that's being traded, or indexes that are being exposed to said assets individually or collectively, right? As we would, mouthful, huh? A little bit too much like we don't need Professor London here at the Crypto School of Economics. They should have that. It would be nice. Let's take a look at what we've got, a flat top resistance on Tesla. Let's take a look at some of the trades that'll carry into the next number of, let's just say this first round of trades. If you didn't catch the specifics, I'm going to let you know. And you know this already, but looking at and over the 20 moving average as a long opportunity on the weekly, under the 20 moving average as a short opportunity on the weekly. Yes, okay? Don't miss the fact that the bears have been paid twice, handsomely, nicely, bam, to the downside after a cross under that 20 moving average. Now, what was the deal here? Remember, as you backtest, you need to recognize, it sounds so easy, just under the 20 moving average, short, bam, great. It's exactly what we wanted to happen, but take a look at this next week. Where were the shorts waiting? On the 20, after what? We got that 50% max completion to the specific lower band during this week here on Tesla after the cross under on the 20 moving average. What happened? Wham! Nice, guys, just a nice turn of the corner, flashing back, power move back to the 20 moving average. That's the type of volatility we like. That's what we're looking for. This Tesla chart on the weekly, bam. Okay, now on this flip back, first of all, let's talk about it. The 50% here, the traders had a decision to take or not. Right? When I talk about the 50% being, you can see it happen here too. Cross under, 50% take. Yep. Before the flip back. Now, what does this cost you? So it didn't cost me anything because we ultimately went to target. Well, it cost you 1, 2, 3, 4 weeks, an additional 4 weeks to get through to get paid on your short. Okay, what do we have here? Again, costing in terms of that max probability when we saw it on the screen yesterday, just back testing, right? Just back testing, programmed back testing. We have been involved in machine learning formulation, looking at some of the advanced mechanisms that have been in play and are used by, not as we just talked about a crossover tactic, et cetera, as it would apply to any asset, and seeing a nice pickup here on the day. Great after yesterday's discussion there on Tesla. But we have applied machine learning. We have looked into the parameters of sklearn and the dynamics that are involved in a typical Python level, advanced, I'd say enterprise degree of machine learning, in line with my past, which includes some software oversight teams at a very high level in terms of some international consulting, high level, just at the direct corporate management level, at a high level of consulting financially that I've done precedingly. It kind of opens me up in that software development, I would say, field, to being able to coordinate some nice projects as they would apply to trading. Anything algorithmic, anything that deals with software, programming, et cetera. I've worked on some really, really top-notch teams, guys. If not, at the time, it was the top-notch team that I knew of globally, and I knew of quite a few globally. And that was a pleasure to work with Mr. Pedro Young. It was a nice time, and in terms of just the reporting capacity, that was really, really a lot of high-level financial programming that went on. So I'm excited to bring that to you, mouthful, but excited to bring that to you in terms of the framework of what we are focused on. Because you can say, London, you're really looking at a lot of you've got your machine learning. As we look at Tesla here, we'll flip over to NVIDIA. But if you look at the dynamics of we have it included: flat top resistance, descending line of support. And this is a nice one. This is a really nice one to go back and look at, isn't it? Why is this a nice one to go back and look at? You've reviewed and and VIP, you know this immediately, don't you? Let's take a look at this very quickly. Let's take a look at, and I bring up the software development feature because I've just had the opportunity to work on some dynamic teams with some guys that you can't beat. I'm going to tell you, I know this, you cannot beat them. So to the extent that I've been exposed to that level or caliber of a software or team development environment, I just am excited to be able to share that with you. And it has nothing to do with a handshake. I'll just tell you, I'm less of a programmer. You guys know this, less of a programmer, more of a people person. I really enjoy interaction with people and not just that staunchly code-driven development team. But I've had the opportunity to try and survive in the latter, right? And I have. I've done well in that latter development context, financial programming at an international level. So it's been at a really, really high international level, responsible to some very, very important key figureheads at primary internationally relevant leaders, period. So looking at the specifics here, mouthful, just to let you know, give you a little bit of background. Looking at that level of support descending, flat top resistance, what does Bulkowski, just curious, what does Bulkowski say about this right here? What does he say about that drop? Just so we can give credit where credit is due. What does he say about this drop, guys? You got it. You know it. Yep. Okay, so a bit of a frustration here on that ascending triangle from yesterday, left with this specific power play here for the open of New York. Nicely done. And I like to see this conformance with the empirical data set of the last 4 decades plus. Nicely done. Boom, boom, boom. Nice. Bulkowski says if and when you can see a flat top resistance descending line of support, that this is your key focal. Get it to bust. Get it to bust and look at the pickup. That's not me saying that. If you review Bulkowski and you come up with a different conclusion, you tell me. You tell me. And if it's well-founded, I will, or if there's any kind of discrepancy in his materials, I will bring it up to him. Say, hold on, Tom, we got an issue here. What do you think? And he's a great guy. He will definitely want to reply to that. Now, in terms of, I want to say good morning, Venus. Good morning. Good morning, VIP. Hope you're all doing well. Looking at the opportunity again this morning, how simply could we put it forth yesterday? And you may say, well, that's just too risky for me. How do you mitigate risk? If you wanted to mitigate risk, what's a tool the market gives us to mitigate risk? Well, a tool to mitigate risk might be like a stop loss. Yeah, how good are you at executing in terms of deployment of a specific trade and of guys, how tight can you get your stop loss? How accurate and precise can you get your trade entries? That's where the magic happens. That is where the magic happens in the market. Not just what direction is it going. You can know the direction. You can be poorly situated in terms of the level of precision of your entry. A lot of that comes, and we've been attracted to, without a doubt, we have been attracted to these guys, to the tag equities, I have to say, given the fact that they're higher liquidity concerns. How could we not be more attracted as I flip over to NVIDIA? But how could we not be attracted to, honestly, guys, how could we not be attracted to Tesla? Bam. That run that Tesla went on was literally record-breaking here in terms of that move to the upside from that bull flag. And are you going to find a better bull flag? Are you going to find one? If you do, you need to trade it. Period. Trade it. But you don't want to trade it on a poor liquidity concern, right? You don't want to trade it on a poor liquidity concern. And what do we have with crypto right now? Out of just some blanket recognition for the objective facts. We have hundreds or more poor liquidity concerns, meaning it's a perfect pattern. You know, guys, the hunt is on for the traders looking for a perfect pattern in a poor liquidity concern as an opportunity to yank potentially cash out of those traders' pockets. It's just a dynamic of lower liquidity. So we're very, 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 I have to say I've just been concerned with that in terms of the ability to trade and reinforce anything in the crypto market. So it's by opportunity and a bit of necessity that we would look at some higher liquidity concerns and just volatility. You know that. So if we can combine volatility with a higher level of liquidity and some reinforced expectations that we might have, therefore, given those two preceding factors, right, some increased expectations in terms of a technical performance, now we're talking, right? If we can combine that, guys, that we just are looking for that formula. We want the volatility, yes. We want the liquidity, yes. Technical expression, yes. And if we can get everything firing on all cylinders, we're looking at a really, really potentially nice equation for simple trading. It doesn't have to be overly complicated, but it becomes more complicated when that series that I mentioned, it was a series, a bit of a development series there. In terms of the factors I listed, when those elements aren't in play, it becomes more complicated. When we have poor liquidity or ghosted liquidity, when we see news events, which we've seen in crypto this year, and we have news events that are operating in opposite of potential price action to some randomized level or degree, when we see that, even on some primary moves, now we are literally like a microscope in on Bitcoin. We just are. Okay, so we catch the majority of what Bitcoin's doing, but it's difficult to say I want to divorce myself and ignore the technicals. 30-minute, what's got your eye? What's got your eye on the 30-minute? Everybody sees it? Yes, indeed. You got it? Boom, boom. What is this? Expanding volatility. You got it? What do we hunt down? Expanding volatility. You got it. Boom, boom. Hunt them down. Look at them. When you see your multi-time frame components in play, now you want to do what? Now you found a pattern, you want to look for some confirmation. Do we have a target to the upside, target to the downside? What did we do yesterday? What did we find yesterday on Bitcoin on the 30-minute? What performed really well? There we go. We had an expanding volatility to the downside, rocked, boom, the bell to the upside. You got it. So why do we pay attention to these? Because they can be some rainmakers, without a doubt. But I don't enjoy trading these on poor liquidity concerns. I don't trust the technicals on something that has poor liquidity. It's not bad to, guys, get into the ring with a boxer who has no rules, right? You know, it's just, it is. It's like you're not necessarily fighting a pro fight with no referee. You know, there's no referee and a guy who's got a reputation for breaking all the rules in the boxing ring. You can still box. You can still get your hits in. You can still, and you can hunt out the better boxers amongst those specific dynamics that I've mentioned as just an analogy, right? And not to down talk anything. Looking at the compromised position here in terms of the potential for the move to the downside, what would we do every time we see this dynamic in play? We would look at and attempt to assess the specifics on the lines versus the candle wicks. Where's our max probability move? To the 50%. Same on the tactic Bollinger Band. Boom, 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 boom. On the 30-minute. Looking at this pickup, is it convenient? Is it stress-free? No, it's not. Where's an additional value zone based on this expanding volatility? Well, we like it to go to the downside. This is the value zone. We love a recoup move like we just got on Tesla on the open. Yeah, nicely done. Review Bolkowski. What an unpopular thing to say in the morning. Go get your 1,000-page encyclopedia book. It just has the answers in it. If you don't like the answers, it's an unpopular statement. If you like the answers in the market, that book is full of answers. So all we're trying to do is focus on the right answers in the right conditions to apply them to. We have to look for the right conditions to apply them to. That higher liquidity, you got it, the high liquidity, okay, it is one of those conditions. So we even look at, as we were to review our watch list, we look at Bitcoin, we look at Solana, to the extent that Ethereum, of course, and we will dip down into Polygon, potentially, SHIB, potentially looking at the Doge, potentially XRP, potentially, to the extent that, yes, they offer a potential, at least the ladders, in terms of a higher liquidity opportunity. Is there a trade desk anywhere trading any of the, on Wall Street or otherwise, an official one that's trading any of the crypto concerns? A trade desk anywhere that has any expectations in terms of the patterning for any of my watch list on crypto? As I work my way down into the equation, some of these, to trade them would be philanthropic at best, right? I'm going to donate to the crypto markets. You know, you've traded these. It's like you might as well just, let's look at what is TRB doing? It's going through the roof. 23% to the upside. Okay, nicely done. Is that a high liquidity concern? Well, it's going to print high liquidity and high volume for the day, isn't it? You're going to look at your liquidity. You're going to look at the overall interaction of the market. That's up 23%. If you caught the move, congratulations. Some of you are trading TRB. Hey, are we going to focus on the market open for New York? Probably not. Those, just watch your lower liquidity concerns. You know it when you see it. And I'll just tell you that the overall market is not driving liquidity. Let's say just driving it. Let's say as just be cautious. Just be cautious. Yeah, as in everything, guys. As in everything. And let's talk about where we're at on equities. Again, just calling it. I'll just say calling the opportunity to engage in the market on a drop on Tesla this morning. Boom, boom. Once you get a hit within the first 5 minutes. That's it. Within the first few minutes. That's why we look at the open. That's it. That's it. Right? So we're not going to talk about necessarily, guys, we're not running 401ks here. We're just not. We're looking at technical dynamics as presented to us by New York Institute of Finance or any other authority that we may personally or otherwise know. Tom Bukowski, number one guy. And I will just say that to the extent that we would like to capture some relevant opportunities for you to trade, if you can master this open a bit, just a bit, throw a hat in the ring and do it in line with 100 rounds. If you're going to get into a training regimen in terms of, or routine in terms of your experience level, or how you're going to build your experience level in the market, do it with something that builds a profile that is going to lend to a level of consistency. If you find yourself, I will say this up front and center, if you find yourself doing 100 rounds or engaging in trades on the open of equities and you're not finding any increased level of consistency, if you're not, then something in the equation should change, okay? If you're continually battle ramming into an open and you're not seeing any trade opportunities or any express logic whatsoever, then go back to the books, stick with Bitcoin. You may be very successful at Bitcoin, right? You may be very successful at Bitcoin. We want to go cross dynamic here in terms of the expression of volatility. Does this make this dangerous, this second one, after a great performance on the first one? What does it remind you of? This reminds us of what? Almost exactly. Not particularly, because we had a blackjack here on NVDA. Do you guys recall that move? We had a blackjack on NVDA here, didn't we? Yep. A few days ago. Heck of a move. Surprise. Double bottom, single pass through, bam. Now this is an expression of a bell that we discussed yesterday that traded well to the upside. That was the reason that expanding volatility, boom, for the move to the upside. That was it. You got it. Now, as we look at this specifically situated secondary kind of fractal and a micro, we're always aware of the micro, okay, as it could be trumped by any level of a macro, right? The small picture in terms of the override consideration or concern or ability, let's say rather, of a macro patterning in play, or a macro, if we were to really back out, because these can sting. The smaller they get, it's just like the smaller you're operating, the more it can burn as we really start to back out and see, okay, what's another level of support here, other dynamics in play that we could adhere to that could have a bit of a different effect on our potential pickup in the market. Always back out on Bitcoin or otherwise. Just force yourself to do such. We're in a really extended, slimmed out channel, and we'll have a specific wedge formation on variable time frames here we're just around that wedge apex and frustrating on the 4 hourly. Yeah, agreed. That's not ideal in terms of the operation of a falling wedge, clearly, but the dynamics are there. Level of resistance hit was noted. What I will say is, in terms of the function of NVIDIA versus Bitcoin, which we're looking at now, the preceding setup with NVIDIA versus Bitcoin, we like the probabilities that we see on the screen here. We like the probabilities, and a shout out to Lucas. I just got a message from Lucas in Switzerland. What's up, Lucas? My man, what's up? Brother, hope you may be listening. I doubt it. You're always busy, but great to hear from Lucas. I just got a message from him. We're really excited about some additional indicators that we have developed here, which are just awesome. Exciting to get a message from Lucas. That's a good thing. It helps make my morning better. Let's look at the details as we look at a Bollinger Band. Now, this is just some work that we're doing in terms of, and this may help us, guys. Let's look at this real quickly, just to kind of go over. Big screen TVs are the way to go on VIP. Pay attention. Now, as we would look at the specifics on Bitcoin, let's let the Bollinger Band, multi-layer Bollinger Band, all-in-one load. Let's take a look. Now, this is an opportunity for us to see all the Bollinger Bands on every time frame. And you get into these higher level hit percentages. You'll get into higher level hit percentages if you say, well, okay, I don't need to hit the actual upside or downside band. What if I go for 50%? A 50% trade, okay? So the benefit that we have here, we can tell on any time frame that we're on. We are currently, this is the projected in the actual 1 hour standard deviation, okay? That's the hourly standard deviation that we're on, okay? This is in the context of being on the 5-minute chart. So the 5-minute chart crossed under, boom. Expression to the downside. We can also see here, let's take a look. That's just great to get a message from Lucas. What's up, Lucas? Switzerland in the house, huh? You got to say Switzerland in the house. What's going on? He's part of, I guess, the dev team, and has really put a lot of quality work into this targeting mechanism, okay, into this multi-time frame Bollinger Band. I just wanted to see every standard deviation and every moving average while I'm on one time frame. I just wanted to see it. Wanted to see the condition. Are we above or below the 20 moving average on all the time frames, right? We are below the specific moving averages on all of these time frames, the 1 minute, 3 minute, 5 minute, the 30 minute, hourly, the 4 hourly, 6 hourly, 8 hourly, daily, weekly, and monthly. We're below on Bitcoin. Check it, guys. You got to check that fact. I'm going to say check it because it's still, is it finalized? No, in terms of the indicator, but it's there. That's some real stuff there. So what we're going to look at is what I would look at is the confluence, the overlap of, I have a standard deviation, the 5 minute, 15 minute, and 30 minute here, boom, 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 boom. Okay, so prices that are acting and coming into contact with the standard deviation, that bottom side band on the hourly, 5 minute, 15 minute, and 30 minute. Very, very relevant. We see that pick up. We see this line pick up as support frequently. Don't we? We see that act as an immediate level of support or resistance, and we have a confluence here. When we start to get an overlap between the time frames, I become interested, particularly when we start to see a squeeze. When I see those bands tightening, not just on one time frame, but on several time frames. You got it. So this is something that I'm really looking forward to. It's 99% the way there in terms of the indicator. It just is. It's 99% of the way there. And I know you guys have a ton of opportunity to use the indicators that are already in play. But as we look at any additional advantage, the indicators are brought to existence when, just so that you know about the group, they're brought to existence when I see a trader that's struggling with anything or encountering any kind of difficulty in the market. Yes, I see a trader who is flipping time frames, trying to say, well, actually we're under the 5 minute or over on the hourly, we haven't completed to target on the 4 hourly or 6 hourly, right? Then I try and think of a solution. Now this solution could look a little bit, as we were to talk about, I'll do a full video on every indicator Hopefully it's not famous last words. I'll do a full video on every indicator so you know their complexity and how to work them. And I know the machine learning is just kind of taking a back seat. It's like, where's the video on machine learning? I don't know. I don't know, guys. That took 6 months of advanced programming, machine learning to dig into. So the cat's not out of the bag in terms of that. I'd like you to experiment with it a bit, see what potential it has. As we're looking at the 3-minute, we're seeing an opportunity amidst the expansion. Okay, we're seeing the levels that come into play, first of all, on the Bollinger. Yes, okay. But we're seeing a flat bottom support nearly that has frustrated to the downside. Now, we know, without a doubt, who gets excited underneath descending triangles. Typically, when we've been through this, typically, is whom? Well, bulls like to get involved underneath descending triangles. For what reason? Great opportunity to discuss this. Let's talk about it. Look at this. In terms of the measurement, the high to low, we'll call this a descending triangle on the 3-minute. Pay attention, please pay attention. Big moment here on Bitcoin to discuss a very important fact. When you have a well-scripted out return from the 23.6 up to preceding level of support to flip to resistance, and NVIDIA and Tesla are kind of holding tight right now, guys. They're in the same zone. Nice flash trade, first 5-6 minutes of price action, and now they're just kind of breathing. Yeah, not bad. When you get to the price, when you look at the price, I'll tell you this, when you look at the price and the percentage and you know whether or not and where it is in terms of the patterning, that's an advantage. Okay, that is a big advantage. That's like having an ace up your sleeve in the at Wimbledon, right? Just anytime you need to pull it out, it's like, okay, I can ace this guy if I need to at Wimbledon, right? But you can't be full of aces, right? You can't just be full of aces all the time. So mind that fact. But when you can look at Tesla and NVIDIA and say, okay, I know where they're at in patterning, I know what level they're trying to break, and know I know you have screens up, but as you're looking and we're focusing on one dynamic of, let's say, Bitcoin. Let's get back to the important feature here. The specific hit at the 23.6, wicks take us down to the 38.2. As we're looking at the return move here on the lines, it is worth discussing the extent to which we have the opportunity to traject up here given a completion to the 23.6, and do we prefer or not the specific move down, 23.6 recovery, flat bottom support to resistance, as we look at and assess the potential for an overplay like this. Okay, there is a difference between what you're looking at now on the screen and a move which would have crafted out, okay, and expressed itself like this. There's a differential here between, and it's choppy at best, but the reconfirmation hit here, okay, has varied the equation, okay, has changed this opportunity zone here, okay, or the opportunity zone here, with the ambiguity that the market has provided, wherein which the following, guys. The following question would be considered, and you already know it, but it's considered by the bulls as you look at it, and just understand it technically, okay? Application, and as you get into it and which direction it's going, understand this technically first of all. Because we've already touched at the 38.2 and rebounded. So is this a failed blackjack? And by blackjack, I mean what? I mean a double bottom, that 2. There's the 21 blackjack, right? So looking at that 2, double bottom, bottom 1, bottom 2. And a single pass through, what we look for is not just the recovery to the preceding level of support to flip as, guys, essentially resistance in the context of a nice move up. We see it frequently on Bitcoin. With a degree of relevant statistical probability, we see it. It's not the optimal. It's not the best move we can find in the market. It's not. But in terms of volatility, the way that it can express itself, we pay attention to it with this recoup and just power drive to the upside. Now, with this specific move here, the question is, okay, so is this a failed blackjack? Confirmation, quote unquote, as we look at a preceding level of support flipping to a level of resistance, you'd say, okay, confirmation. NVIDIA on the move a bit. Nice to see. Tesla slightly on the move. Okay, looking, I just out of the corner of my eye. Looking at it, but I want to cover this. So this would be an issue that we would look at and need to situate differently technically. We agree? Yes. Is this a failed blackjack? Potentially. Is it being assessed as such by us? Certainly. Other traders? Absolutely. Looking for a power drive of a move. And we discussed this one aspect. Let's remind ourselves of this. On a flat bottom support. And again, NVDA, to us guys, it's a chart. It's a pattern, right? NVIDIA does the same thing, opens up, bam. What else did NVIDIA do? Power drove down through this level. You know how rare that was. Statistically speaking, based on backtesting, the last 40 years, that power drive moved down to here without anything else in play was quite a move. What did it teach us? Look for expanding volatility. What was difficult to find? The expanding volatility. What time frame was it? It was on the 3-minute, right? Yeah. So, and we see it here. Let's get on to the 30-second real quickly. Just to follow in line with the lesson that NVIDIA taught us. Yeah. In terms of let me find this specific expansion. It's going to be a deep dig on this one, without a doubt. I would promise nearly that my specific menus have been rearranged. I know they haven't, but it's just, I get like that. When we get highly technical and I start coding, I don't know why. Working with the code team, and shout out again to Lucas in Switzerland. The situation would be this. Now we're talking, now we have a formula for success, right? It is a formula for success. Support, resistance, support, resistance, support, resistance. Hit 1, 2, 3 on support. Hit 1, 2, 3 on resistance. Okay, that's a lot cleaner than what we like to rock the bells. Bitcoin is the asset of choice on this. It just is. But NVIDIA was impressive, even to the extent of being challenging on finding this expansion. Now, the question's going to come into play. Downside positions are loaded where? You know where they're loaded. Bam, on support. What's the advantage of trading something like this? The advantage is that you are looking at a level, a lower entry in terms of a long. Yes, indeed. Without a doubt. That's one of the advantages, aside from the probability of the moves that these can effectuate in the market. We're looking at entries lower long. Typically, if your tactic includes entries lower for your longs, it is a protective device. You know when you lose. You know when you lose, guys. True or false? I don't care if you're trading, if you're trading anything, whatever it may be, even personally, whatever it may be. When you see something escalating in price, go to a department store. I don't know. But anything in the market, technically, that you see the expression of price action moving to the upside, when do you get hurt in the market? When it's going up. And you do what? Well, it's going up, and so I'm going to buy. Oh, so that's painful, right? I see. And when do you get hurt shorting? Well, it's going down, so I'm going to short. What does it do when you short and it's going down and you short? What does it do? True or false? Yep. What does it do? What does price do when it's going up and you long? True or false? If that does not happen to you and you see price action going to the upside, and when you hit the button, it's a rocket ship for you. Okay? I'd like to know what you're doing. If price is going down and you hit the short button and it just continues and it is a consistent payer for you, wow, I'd like to know what you're doing, because that's the atypical experience in the market. True, we know this. So the safeguard here is the following. The safeguard is anything that's going to encourage you to consider, right? To consider entries lower for your longs. You got it, without a doubt. And that biggest miserable condition, I will tell you, and you know this, well, price is going up. And what does it do? It attracts traders who are sitting there as it's going up. Buy, 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 buy. And what happens? Literally just, it is prolific in the markets. Or price begins to go down. And what? Well, it's going down, so let's short, and then it retracts. True? It's the biggest problem for traders. You guys can attest to it because you trade enough. You know that. So that's where fire and ice comes into play. Yeah, fire and ice, because what? Consistently, we are looking for, let's clean this up just real quickly. A shout out and good morning. Having a good trade week thus far. Nice open on Tesla. Noted. Nice open on Tesla. What did we do? Poured down into the fire sale line on the 3-minute time frame. I didn't want to oversimplify things yesterday. But what's going to happen on a market open? You're going to get a drop, huh? Or maybe you're one of three things. You're standstill, you've dropped, or you've moved to the upside. So what are your options here? Well, it's dropped. You want a position? If you took a position, what did it do? It paid. It was down. Here you go. This is just slightly relevant. Price was going down. Ooh, it's going down. Let's short. People hitting the short button, and what happens? Well, sorry guys, right? We see this with a relative degree of frequency. We'll measure it and backtest it, et cetera. In terms of that, just on the opening days, it's going to require some code and a little bit of a project. But how many opening days on a drop recover and pay people who enter in, and under what conditions would be nice to know on market open? You just have movement. I mean, we spend hours. It's nearly inhumane, but it does pay well when it moves. In terms of crypto and Bitcoin, you know this, nearly inhumane. It's open 24/7, 365. It's inhumane when what? When qualified statement, when there's no volatility. So if we can find volatility, something that's moving, right? Something that's moving. We will trade mousetraps. I don't care, guys. We will literally trade, literally give us some volatility, some consistent levels of, we would have to couch that with what? Have to couch it with, well, we need liquidity. We need some technical considerations and reasonable levels of expectation. But that's just to say there's corn futures, soybean futures. There's all types of things to gold, there's silver, there's all types of things, oil. Reminder on oil. We discussed earlier on this morning the short condition under the 20, the long condition over the 20 on the weekly. Not just for Tesla, for the entirety of what's being looked at in the markets right now, as that level continues to express itself and be in play, right? Exciting to see that level in play directly. We opened up underneath that 20 on NVDA. You got it. Where are we at on the NASDAQ on this particular issue? Yes, indeed. You can't forget it on the weekly under the 20. Not that far away, huh? It's not that far away if we have to wait a week or two. This bottom side band on the NASDAQ noted some critical levels in play here. Potential for a bull flag. If you're not looking at a bull flag, a little bit, we have some cross indications. Potentially, this would be nice. We don't see many of them. This would be a dream come true. Literally, we'd wake up and be like, whoa. Let's rock and roll it. It would be nice to get some good, consistent action in line with technical expectations and fill this thing out so the drop could be beautiful on the NASDAQ. We like the patterns, guys. We like the consistency. Look at the waning. You guys got that, the specific waning momentum. You'll see on these charts the specific bull or bear that's per time frame, right? Per time frame, and it is indicative, we can say, of momentum. It's also going to line relatively well with your capital control line, guys, your cap line. Okay, you're looking at a bit of a conflict here in your 15-minute and your 5-minute on Tesla. You're sandwiched in terms of your reinforcement of a cap line, which has traded. Okay, your cap line on the 5-minute has traded, and your 15-minute is potentially, guys, interactive at that short dynamic. Okay, looking at just as you see this bull bear, what is it? I don't want to be caught off guards. If we are distracted at all here, first of all, I've explained this is not for purposes of trading. We have a delay tactic, which is really protective in nature. Almost appreciated on behalf of YouTube that we have a delay function so you're not relying at all on this stream for trading. As I tell you guys all the time, it's a conversation between us. You're technically proficient enough that we can have this conversation. To the extent that we want real time, okay, it's been discussed, and we may schedule into such with some additional parameters with essentially Slack or whatever else we may do that could get rebroadcasted for any other interested parties that would want to join our group. If you don't want to join, you don't want to trade, it's okay. Looking at flat bottom support, we've got some dynamics in play. You know we have orders below on NVIDIA. Looking at the momentum, bull means what? Let's just do this. Bull means that we're turning on the 4 hourly to the upside. Danger zone. 4 hourly momentum is difficult. This is a squeeze momentum. It is MACD with settings of 15 and 199. Also one of the most popular trading view indicators, which would be squeeze, quote unquote. This dynamic is used by a lot of traders. We refer to it as MACD momentum. Okay, MACD momentum. And the hack through that is literally, instead of quote unquote squeeze, which got a lot of attention, it's like, man, they just repackaged that. Like literally, it's like, that's kind of not true. It's just MACD with 15 and 199 settings, right? So the popular masses like the word quote unquote squeeze. We like the word momentum. We really do like the word momentum because it's required on breakouts. As you look at your patterning, we need a breakout and momentum. Looking at that reinforced level on NVIDIA, nicely done. Cap line in play, 0.32%, boom. Nice small trade on NVIDIA on the 5-minute. Nice action. Way to go. Again, if we want to designate this as a momentum line, if the capital control line is a line that is subject to or coincident with momentum, okay, pay attention to such. We are privy to the calculatives behind the RSI stochastic MACD line. For it to contravene momentum would be very difficult, okay, to express. We do have divergences. We do have divergences, right? Okay. Looking at the interaction of the dotted lines behind, as you get into tricky price action, okay, I just want to remind you, as you get into, and Bitcoin is the master of this, as you get into some tricky price action, let's go back if we can find that Bitcoin chart. Where are we? Where are we? Where are we? Come here, Bitcoin. Let me take that off. Boom. Let's take a look at, let's see, guys. This is actually machine learning, just to reinforce what machine learning is, okay? If you look at it and say, well, I would need training on that, great. No problem. It's sophisticated enough to do so, but you can get an appreciation for its strong suit. Looking at this, you can get an appreciation. That's the entire history of Bitcoin. You can get a visual appreciation for what it's doing. That's on the weekly chart. You can definitely visually appreciate what it's doing. Okay? Now the settings, how to set it up, etc. That's a beautiful, beautiful chart. Looking here at, just a lack of performance. Looking here, okay, you've got a wrong call. Looking here, boom. Machine learning a lot of times really wants that higher high. Really wants that degree, depending on settings, that real launch factor. Bam, bam. It really wants to get up and above and continue up. Okay? We look at NVIDIA, for instance. It really wants that screaming price action. It really appreciates, as you look at NVIDIA on machine learning on the weekly, it wants something to get up and go sustainably, guys, in terms of its ability to capture on a trade that not just moves, but then it really moves, right? And and this is back to the conversation in terms of Bitcoin. What do we have here? We're on leading low skew. What do we got here? 4-hour pivot finder caught the doji before the drop. Another awesome indicator, BTC. Great. That's awesome. Glad to see you're plugged into that Venus. Let's take a look at that. Let's take a look at that on the, let me back out of this. So the 4-hour pivot finder, beautifully well done. Very nice, nice look. Let's see, 4-hour. Oh yes, indeed. Boom, boom. Nicely done, eh? Nicely done. Take a look at this. Nice, nice. What is this? Radial basis frequency. Kernel. Radial basis frequency, meaning computationally significant in the realm or in the zone of field of, rather, machine learning. Radial basis frequency, so that you know the term radial basis frequency means what? It is a specific kernel calculative that's used in support vector machines. Okay, a support vector machine is a high-level machine learning field, subset. So I extracted and applied the radial basis frequency here. What does it mean? Well, it's going to identify a doji, a statistically significant, in the context of or with the language of machine learning, a significant doji, boom, on the 4-hourly. So, well, that was convenient. Well, no, it's significant in the context of, and just let it go through your mind once. Be exposed to it. Radial basis frequency, support vector machine. Go look up support vector machines. Go look up MIT support vector machines or hedge fund support vector machines. All right. Typically, you're not going to find any of the residuals thereof or components of support vector machines that are going to work in the trading view context. So it's a big step forward for us to be able to bring in that radial basis frequency kernel, boom, with the spike and bam. Nicely done, nicely done. Exciting to try and push the boundaries of trading view to be more expressive of a more complicated set of, but however, still highly reliable set of indicators dealing with machine learning that still don't push the boundaries too much of trading view, because it's not built to be an enterprise solution for hedge funds per se, right? They've got proprietary, most likely proprietary level scripts and formulas that are really at work with heavy equipment, heavy processing power, right? So nice heads up, Venus, on that. Great to see that pivot finder light. If you're VIP, you've got it. A nice look, Venus. Very, very nicely done. Bam. Good to see it work, huh? Nice to see it in action. So again, shout out to Lucas in Switzerland this morning, part of the dev team that helped me fulfill this vision in terms of a multi-time frame Bollinger. We got some good stuff going on here. Multi-time frame Bollinger, okay, where I can see all those time frames on a single, what's NVDA doing, huh? You guys want to check it out? We will in 1 second. But on a single time frame, seeing all of the relevant, I want to see the 4 hourly, 8 hourly, daily, etc. in terms of those Bollinger Bands. If I want to see the entirety of our being under or over the 20 moving average, if I want to see, it's just great. And shout out again to Lucas. We're excited about the incoming possibility on this multi-time frame Bollinger Band all-in-one. Looking at, do we have any targets? No, not measured to the 50%. Let's raise this to the 75%. Are there any Bollinger Bands or any 20 moving averages we've crossed over or under where I don't have a completion to that 75% level? Let's see how it fills out. The answer is no. So we have no new targets based on even a 75% completion rate. Okay, if I go to the 100, we may have some, but that's pushing it in terms of the probabilities. We just stepped down to the 50% level of completions. Okay, meaning I want to get closer to that target of the top side or downside band on the Bollinger per the New York Institute of Finance, NYIF, where Wall Street goes to school, per their tactic. If I want to complete to 100% of that band, my probability is going to sink. If I'm willing to take a 50% target play out, then my probabilities are going to go up. Okay, I'll start to see some 60s, some 70s potentially. All right, instead of 40s and 50s. More reasonable demands on the market, expectations on the market will flesh themselves out in terms of the probabilities being higher for the more reasonable traders, being lower for the less reasonable traders. You push your specific position to an extreme or a full 100% completion and demand it from the market. We see that on patterns, right? Demanding, right? Well, I'm going to demand that this pattern, it needs to go to 100%. That's the true or false, guys. You know this. Is that the biggest mistake for new traders? The majority of traders. So we look at Tesla with a need to break out over 247, and there she goes. Where didn't you want to get involved on a breakout? At the breakout. True? True. Okay. So looking at a dynamic in play, what is going on right now? Well, preceding level of support to the left, acting as a potential frustration here. And what are we doing on NVIDIA? How's NVIDIA doing? Let's look at NVIDIA, and I may have just changed this chart to NVIDIA. This is just Tesla on this specific spread. Looking at a nice interplay. Now let's mark this in a different context. If you hammered into on open, it's a good day, guys. Looking at this, if you hammered into the open on the drop and the fire sale line on the 3 minute, we like a fire sale. Yeah. Boom, boom. Looking at a 2.56% move. That's all right. Taking a look at the hour worth of action that Tesla has provided traders today. Way to go, way to go, way to go, way to go. Now we're pushing into, we know we don't have to go to the weekly, right? Yeah, we know we're pushing this line. What's being defined here? Are we long over the 20 moving average? Yes. Are we short under the 20 moving average? Yes. Right? You got it. You don't want to get hammered and chopped up too long on that line. You got it. But as a general expression and condition, the 20 moving average, we're going to be long over the 20. We're going to be short under the 20. Okay? With the qualification brought into bear precedingly, let it hit. Let it cross under. What's going to be waiting on that 20 moving average? Shorts. Boom. Bam. You got it. That's on the weekly. These are not quick moves. These take a long time to realize themselves. Right? You got it. So what's going on in breakout? We go through this every day. Preceding level of resistance, where are the orders? Stacked? Boom. That's a fact. We know that, right? So everybody gets antsy. It's going up, it's going up, it's going up. What did we just talk about? You know it without a doubt. Well, price is going up. Ooh, and what happens when you click the button? True or false? It just happened. You evaluate true or false. You know, you trade enough. Price is going up. Oh, time to go long. What happens? Up to here. Price is breaking out. It's going up, attracting the traders. They're hitting the button. Buy, 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 buy. Whoops. You got it. It just happens. And what's going on in the context of a breakout here? Orders are being set here and below. Are you going to get a reconfirmation hit every time? No. Okay, so what governs here? If you're breaking out, let's say if you're trading breakouts on anything, if you're trading breakouts on anything as we look at Tesla, what's going on? You're being beaten 100% of the time by someone who has a pre-existing position, a pre-launch, pre-breakout position. You're being beaten every time. That doesn't sound like a good dynamic in the market. It's just the truth, right? So nice to see some action up, out, and over. We'll go through targets. You know how to deploy them, right? You got it. Let's look at, that's Tesla. Let's look at NVDA. Let me find where we're at on NVIDIA. I had one specific. This is not too much to manage, but it's a little bit to manage, right? What immediately hits in this specific 15-minute looks very nice. The 3-minute. Now, I've got the bull-bear feature going on. What do we got here? Handful of stocks have driven much of this year's rally. That's become a serious problem on the way down. Okay, that's fine. Let me get rid of this a little news flash element. A little bit just not clean. I don't mind if it's real news, but why would you throw that at me or anyone? That's irrelevant. Okay, let's look at the expression that we had here and take a look at green bullish, right? Where did we get a surprise? Let's see if we can identify a surprise in the context of this launch on NVIDIA. We were bullish here, reinforced where on the cap line? Yeah, bam, nice hit back up on that cap line. Very well done. Seems like we've got a bit of a flat top here with patterning ongoing, and we can argue whether or not this is a blackjack type return to preceding flat bottom support. So that did play. This return move here played well. We will note that on a head and shoulders. Isn't that a bit coy? Between Tesla and NVIDIA, yes. Okay, between this move, bam, nice move. What percentage is this move in terms of the probability of a return to preceding bottom line support of a head and shoulders? What percentage probability? It's in the 60s, right? Do we like it? Not necessarily, right? Reinforcement on a cap line, we like that. That momentum, RSI, stochastic MACD line, we like it. So the, again, hit back into cap line in a green condition worked on your 15-minute. Nicely done. And what are we seeing here? Nicely done. Nicely done. Reinforced. Now, it's no benefit to say, well, support is support until it has no longer held, until it's not support. But what is the distinguishing feature that you'll get that's required is a breach of a level of support, a candle set below, a clear indication. I was having this discussion yesterday, right, that we would like to see some clarity in the market if this level of support is broken. A clean candle underneath would be nice. Don't call it an accommodation, call it a technical requirement that we have a clean candle set underneath. True? Yes. Still like this area. Would have loved, guys, a nice pop down to the bottom side. Let's look at NVIDIA as we discuss the momentum across the board. Okay? What started to pick up? The hourly started to pick up? Yes. What also started to pick up? The 4 hourly started to pick up. Okay? As of when you see this transition here along your momentum, bam. Okay, we started to pick up, had a fake out and a strong divergence, thus a little bit risky to rely fully on that 4 hourly, but in the context of it beginning to behave, noted. Okay, looking at the weekly, again, over, long, under, short. As easy as you can put this. Over the 20, long, under the 20, short on the weekly. That's the key reinforceable level that is in play. Bottom line, let's take a look at the entirety of this formation in terms of the channel framework to the upside. And what are we looking at here? What has engaged here on the daily? Yikes. What do we got? 20, guys, moving average. We are, let me actually pull the 20 on because I've taken that off for purposes of some clarity. We are well below and hit a target on the cross under on the specific, let's go through this, on the specific Bollinger Band, move underneath and bam, slam down to some beautiful downside targets. We are compromised and down and outside of this bullish channel. What today on the daily, as you have your full screen setups, everything in order, what just hit? What just hit? Your specific daily cap line. To a T, exactly precise, bam. Okay? That's a big deal. We're in a bearish construct on the daily. This, to say it's a hurdle? Yeah, it's a hurdle. To say it's a precise, perfect entry? Yeah, it's a precise, perfect entry. To say you can trade that as a short hammer head style, boom, boom, yeah, it played extremely nicely. Extremely nicely. Congratulations to anyone who hit the cap line. Our particular kernel derivative, it is volatility. It is RSI, stochastic, and MACD. And it is a highly precise level of engagement along the lines as we look at a level of engagement on the 15-minute, specific hourly, fire and ice, engaging. And what do we have here on the 3-minute that was a little bit interesting? What do we have? Let's go ahead and go through this to the extent and with accompanying patterns, of course. We love price action. We seek it out. When we find it, it's going to be tough to keep us away from it. It's the bottom line. It's the bottom line. Looking at this specific feature here, we like a broadening bottom formation. We just do. Additional accompanying patterns, of course, without a doubt. And we see these, note these, please. Don't we see these? Like, would that be a nice cup and handle if we could just flip the script here and go with a cupature and then a handle? So it's a flattened bump and run. If you really understand a bump and run, it's like a flattened bump and run. A reverse cup and handle, yeah. If you know a bump and run, that is what it is. Cupature formation, sure. Can we just call it a cupature formation? Yes. Complicated bottoming cupature formation, yes. We just see these with frequency. Everybody also clearly sees if we were to design into the possibility of an additional measured move, clearly everybody sees and understands the possibility for that measured move to be expressed in terms of a bear flag, yes. And it's interesting, we're parking in a bear flag construct amidst some support dynamics. And what is the dynamic in play? The traders are being asked to assess that daily cap line, i.e. momentum, i.e. RSI, stochastic, MACD, fault of the market right now as expressed right with that specific cap line. What does that mean? It's a trade. It was already a trade. Right, on the daily. Are you focused exclusively on NVIDIA? Maybe. So was it a trade? Yes. Is this the trade? Is this the trade on the daily for, pay attention, is this the trade on the daily for NVIDIA on the daily? Well, you had some really nice action up in here, a real nice cross under the 20 moving average here, right? And we've had a lot of talk time on how well different aspects of our cap line have done on NVDA. Beautifully well done. You had to say no to this trade. 15% of the downside on the 4 hourly. You had to say no to it. Now, this is where your cap line outperformed your momentum big time. Unless you do a mere cross under here, cap line still got you in before. So 4 hourly kernel derivative capital control line really, really, really performing well here. And what do we see on the 4 hourly? We see a nice flip. What would we like to do on the 4 hourly? And we did to an extent here, but what would we like to do? We'd like to revisit this specific lower level here on the 4 hourly. Yes, indeed. Be aware of these moves on your open. As we're covering a few different assets, it can be difficult. And let's look at, as we look at the, let's not lose focus on Tesla, which is kind of in, not a standstill, but a bit of a recomposure moment. Looking at a preceding level of resistance, line that out with the candle wicks. Where did we hit back into? You got it. Okay? Someone who's oblivious to this fact of while we're in a breakout, and they're just hammering into the upside. Pay attention on Tesla. As people will hammer in on a breakout, what do we always know? Well, we're going to tuck it right down here and form the market around people who are late to the ball game. Establish the market through a preceding level of resistance to support re-entry, opportunity, trade opportunity, right? Boom. Move to the upside of 0.54% thus far. Nice re-engagement. Definitely nice level of a re-engagement. Do we want to call this a cup and handle? We can. Getting through this preceding level of prior resistance on Tesla, bit of a challenge. As we were to look at the potential here, if you trade Tesla a lot, you know why we would default nearly to even in a regular cup and curvature and handle. Probably, I would just say because of the flat top resistance here, because of that flat top resistance, we would be looking at some immediate targets in line with the flat top resistance, descending line of support. Agreed? Differentiation being what? A differentiation being, and let me go ahead and switch. I need to change this on all the charts. I will attempt to do that by mañana. I hope you're all doing well. We've had a good start to the trade week. Nice to see that pivot finder on the 4 hourly for Bitcoin. Killing it. Just killing it. Yeah, it's going to tell you doji. Then you got to figure out, okay, directionally, which way are we headed? You got it. Right? If we're choppy sideways, okay, we got a potential big move incoming. Right? A strong doji. Well, which direction? Based upon the entirety of the technicals as they present themselves to you for confirmation. So looking at this, yeah, you say, well, we also have a symmetrical triangulation. Sure, we've got a host of patterns. What immediately is the most relevant as we look at 249.01? 249.01 is the 50% max probability of flat top resistance, descending line of support. Okay, so what does that mean? That means this is a natural take with a push at your discretion up into the 250.87. What drops as you get further up here? Your probability. You say, well, it's just not enough money. I need to make more money. Okay. Is there a possibility that you could engage cash differently along the way here with a tighter stop loss or otherwise to still operate in line with the 50% max probabilities? If it were a wish for me, it would be that you maximize your probabilities every turn in the street for success, period, right? So we have access to that information. Can it hit the 250.87? Sure. Let's look at the accompanying pattern framework and what else can be in play that could be traded by immediately by the traders. Looking at and this is just what I don't like about this specific pattern here. Do we want to call it an ascending triangle? Potentially. Can we switch to the wicks and get any type of additional framework? Hit down, up, down. We don't have essentially what I'd like to see for an ascending triangulation. Let's give it a benefit of a doubt in terms of an interpretive play. Okay. What I like to see hit 1, 2, 3, up and out's okay. We'll take it. Let's go ahead and take it. I'd like to see a little bit more technical conformance. Is it defective? Technically, I'm going to say that it is. Is it seem like we are in a trading opportunity zone with Tesla and NVIDIA where some multiple targets may be merited? Sure. Let's look at the upside 50%, 251 And it can be relevant that the 251 and the 250.87 are in a zone of confluence, right? In a little bit of an overlap. We have this internal patterning structure with a micro patterning overlapping with what? As you're looking at a hit on that smaller initial pattern discussed on Tesla into not the 50%, but into that golden pocket. Okay? All right, into that golden pocket. Being that golden ratio, quote unquote, to which all things gravitate towards. You're just seeing a little bit of flex in line with that max probability move. What's the flex that you're seeing? People taking, right? Shorts engaging. Longs bowing out gracefully along the 50% max probability. Is it required? No. Settling in at that 23.6 on a bit of the defective ascending triangulation. I'll just call it defective for aside from this preceding pivot in. I like more hits, and it's always as we look at it, it is always a bit of a tug of war. Pay attention to this. If we get more hits along the way in terms of a pattern formation that we're looking for, what is the conflict? Well, we want more hits, right? But we also want to break out of a pattern structure and understand this tug of war. We haven't discussed it. We want to break out of a pattern structure at the 2/3, 3/4 point at least. Boom, right? That sweet spot, that 2/3 to 3/4 the way into the pattern, you got it. So as we want real high levels of confirmation and structural integrity on our patterns, it's going to take either some higher velocity moves, up, down, up, down. If we don't have that, if we are delayed a bit, or we are requiring, if we're chopping, pushing sideways more, it can just make it either a slow lethargic pattern to trade, or if we are essentially, if we're up and out earlier, we may curtail some additional formation of the pattern we'd like to ultimately see for that ideal conformance. Okay? The additional hits along support and resistance can push us to the extremity towards the apex. Okay? As we fill out an idealized pattern framework, right? Now, we don't want to get into this 75 to 85% threshold, much less past that 85% threshold on into apex for a breakout, quote unquote, right? So noted, capiche, we got it. The longer we spend in this, there could be a correlation with the technical requirements, multiple hits, support, resistance, support. Would have been nice to see a hit at resistance here and a back off, a partial return. That's my complaint on this pattern so that you understand it. I would have preferred to have seen what? 2 hits on support, 2 hits on resistance. Meaning what? Meaning support, resistance, support, resistance. I want a partial return and then boom. That's what I'd love to see. It's easily defined. No one's going to argue with that. The fact that we skipped along and hit resistance and then another hit at resistance, yeah, you got it. We hit into support resistance, we flipped it, set our flat top, which gave us this internal pattern here. Yeah, gave us that flat top resistance descending support on Tesla. So I don't want to skip along. I don't want to support resistance, double hit resistance, and then to support up and out. I don't want that. I want support resistance. Then I would have preferred, let's hit this first. Support, and then resistance, and then a partial return up and out. Because then everyone's on the same page, right? Then I don't have this skip along resistance. I don't want skips along resistance, and I don't want that, guys. I want a 2 hits, support, resistance, support, resistance. Hit 1, hit 2, hit 1, hit 2, okay? Or hit 1 and 2, 1 and 2. And then a partial return is ideal. Bam. If I don't have a partial return, this turns into a bit of a bottoming formation with an implied, ascending triangle, because we don't have 2 real hits at resistance. And I want a hit on the opposite line. I want the bears to engage the bulls, essentially, and the bulls to engage the bears. I want that to happen twice, okay? There'll be some agreement between both parties as to what we're trading. Yeah, you got it. So, bit particular in terms of the technicals, but meeting the technical requirements will give additional level of, let's say, a higher level of conformance, thereby a greater degree of technical probability expressed through the target completion, and hopefully not dealing with a lot of busted patterns, right? We don't like the vague or ambiguous pattern framework. And you'll see that in the authorities. You'll just see that reflected in terms of why didn't this pattern perform well? Well, because it was defective here or there or there. True or false? True. True, 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 true. I'm seeing a cool down from that specific, and on the lines, your dead level set on that 50%. Right? And what is occurring? Maximum probability move on Tesla. Copy that. Where are the orders? When we're breaking out, what are we consistently looking at? Well, where are the orders? Do you have an upside target? Of course you have an upside target. You've got the full 100% completion. Is this or is this not the biggest, one of the biggest problems you see of traders anywhere? Where's the target? I can't find anybody on the planet who wants to talk about, literally, I can look at almost everyone, but I can't find anyone on the planet who wants to trade who's going to discuss fractional completion and maximum probabilities. Which generally tells me that something else is going on if someone's having this huge degree of unimaginable success in the market. And I'm telling you guys, if you don't see that, hello, listen up, please. If I'm seeing someone that's advertising some inexplicable amount of success in the markets, and they don't discuss fractional completion and maximum probabilities, I'm like, who is this clown? What is he being used for? What is going on here? This is trash. I literally will look at it, this is trash. What is going on here? Because they're operating outside of the dynamics of the maximum probabilities of the market. So either there's some other agenda going on, something else behind the scenes. I'm highly suspect, guys, highly suspicious of anything I see. Anyone who's claiming a huge degree of success in the market, I don't care if they throw up a 7 or 8 or 10 figure. I would care less. Whatever they're throwing up, their trade returns, 10-figure trade returns. Like what? Say one thing about maximum probability completions in the market, please. To not look like just a clown. There's something else going on, and I am highly dubious of it, suspicious, and literally to the point I don't want anyone that I know to look at anyone who's not plugged into a maximum probability completion equation. It becomes nonsensical. It literally becomes nonsensical to expect your pattern completion every single time to the 100%, which is going to literally crop dust you out of existence if you continually deploy it, compared to the 50% completion. And looking for OBS Studio reconnecting. Let's see if we are live or situated in or not. I just got an error, a dropped frame. So we may be in a zone where my hypercriticality has expressed itself through me being sanctioned. Maybe YouTube doesn't like, I don't know. Who knows? YouTube does not like anyone who wants to. YouTube, maybe, guys, we just dropped. Interesting. And the crux of a very heated discussion, very important discussion. I'm just so hypercritical of anyone who doesn't follow maximum completions in the market. Maybe they'll cut us off completely because it makes too much sense. Like, give me a break. Give me a break. If you're not falling in line with the maximum completion, fractional completions, maximum probabilities in the market, then you're going to tell me that the guys who are just pouring just millions and millions, tens of millions of dollars of their profits into the pockets of people who aren't operating in line with maximum probabilities in the market. I'm not talking about, well, it's a greater than 50% chance or not. No, I'm talking about literally maximum proficiency, literal empirical data over the preceding 40 years worked into your trade sets. And if you don't have that high degree of proficiency in line with your trades, then how on God's green earth is anyone who's doing that and operating guys ahead of the pack in that regard? How are they're just handing their money out to whatever, you guys got it, you understand it, whatever sideshow may be there that's, raking in tens of millions of dollars a year. I'm like, good gosh, man. Like, this is just sad to watch. Just What's the bottom line without being hypercritical? What's the bottom line? Operate within max probabilities on your fractional completions. If you don't know what that is, I don't blame you because no one will discuss it. You got to dig in terms of the empirical data. You got to find it. It's not well known. Just don't see how people win without it. It's really frustrating to watch it. Hourly 20 moving average, engaged. Boom. On Tesla. Just nice to see. There was a level that was hit, right? Yeah. Let's take a look at NVIDIA. NVIDIA. How'd we do on the cap line? It held. Pushed a little bit, didn't it? It did push a little bit in terms of that RSI stochastic MACD. And about where we were. Not a comfortable push. Let's dig into Bitcoin. Let's take a look at Bitcoin. Uh-oh. Did you give up here? She will make you give up. If you find one of the max probability moves here, you know that. You've traded these. We rock the bells all the time. Where is the value consideration zone? It's underneath this level of support. Down into this zone. You got it. Where do we hit into this? Now we got a completion of a pre-designated 100%. Ready to operate into that zone? Always. Counting on it for every single move? Those are two different things, guys. If I'm looking at a topping formation with a 100% completion to the downside, if I'm looking at this, the majority of the time we're going to the 50%. People who ignore that and trade consistently to the 100%, just get ready for, guys, get ready for disappointment. You trade these patterns enough. You know that. You know when you're always looking for the 100%, what's your hit ratio? It's lower. Your success ratio is lower to hit and drive down to that 100% level. You know this. You know this. Take note of it and reinforce it with the real data in the market that you have exposure to. Tom Bulkowski, Encyclopedia of Chart Patterns, period. Get exposure to it. That's where the real answers are, period. It's not like, oh, I have a preference on a book. It's not a preference, it's an objective fact, period. You know this, you guys know this. Looking at the framework, again, reminiscent of NVIDIA. True? Yes. Reminiscent of rock the bell, bam. These expansions, number one favorite patterns, you know this. Where's the opportunity zone on them? Down and below the level of support. Why are they good? Because they encourage us to enter longs lower. And it's an expression of volatility, and we like to recoup to that level of resistance. Are they easy to identify? You gotta be crazy. You gotta be wildly crazy, guys. These are not easy to identify. You gotta hunt them. You have to be able to identify them. We want, again, multiple hits on support, multiple hits on resistance, and we want that interchange between, that interplay between the bulls and bears, boom, 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 boom. Buyers and sellers, buyers and sellers. We want that expanding volatility. We want to be a part of that equation. It's why we trade. We want increased volatility. This is increased volatility, okay? And we want to be value seekers along this lower line. The notion that we would return to the top line resistance is statistically significant. The same way and the same discussion in terms of the 50% max probability, okay, versus the 100%. I'm going to tell you, our goal is to get back to resistance. Ideally, what I mind, I'm going to tell you, as we see this really trade well in the preceding on Bitcoin in the 30 minutes, which we identified yesterday, bam. Tough level to identify, okay? Tough pattern to identify. We got it though, we caught it. But looking at the bam, rock the bell to the upside, what are we prepared for? We're prepared to be potentially a part of the volatility equation further back down. Yes, absolutely. And you say, well, I mean, I want this to go up. Okay, great. But who got paid here? It is volatility. It's a handoff, bulls to bears, the bulls to bears, the bulls to bears. Bears did well, bears pushing lower. What is the specific line in the sand that's being drawn? It's the cap line on 30 minutes. True? Yes. Difficulty in reachieving, again, opportunity for the bears to reinforce who were involved earlier. How is our momentum doing? Let's check it out. 5 minute, okay, dropping down. 15-minute dropping down. The hourly has been a heck of a push. True? Yes. We have a line in the sand that's being really established, this 5-minute. To the extent that we're over bullish, the 20 moving average, or under short, we're going to be long or short on the 20 on the 5-minute. It's expressed. Crawling along this, and guys looking at downside price action. Momentum shift. Let's pay attention. Let's get into the 4-hourly. 4-hourly, a bit more concerning on Bitcoin. An expression of, let's take a look at just the drop in momentum. We had set into, and we'll note the conformance as the bears attempt to engage in some additional pressure to the downside. And again, shout out to Venus this morning. Nice call on that specific pivot finder play. Let's look here. We caught a pivot finder on the 15-minute as well. Boom, boom, was nice. You're not going to get it on every time frame. It's not going to get it on every move either. But nice to see that pivot finder on the 15-minute. Let's look back at that 4-hourly. 4-hourly precedingly has paid, boom, into a short. Nicely done. We have a bit, you can just square this out. We have a bit of a descending wedge and looking for targets to the upside. Where are the targets to the upside? As you see back at that 5-minute time frame, we'll settle in on a specific level of charts that we're comfortable with. The multi-time frame is very important for us. You know that, especially on open. And so we have engaged. What happened was the 5-minute flipped, engaged to a short. We hit the 50% on the 5-minute in terms of the maximum target completion to the downside after failing essentially a move back up and above. So we busted on the Bollinger Band over under on the 20. We have engaged on the lower pro line on Fire and Ice, Kernel Calculative. You got it, which has paid on a long. We'd have to look at the level of volatility to see if that's worth entering into. And so what's pushing around right now? The volatility equation. What's looking difficult? Let me find this. Where are we at? Let me just take care of some of these. Let me get out of these, some of these. Let me look at Tesla's an interesting story. Just looking at specific momentum, rounding around the 8-hourly, looking important, huh? 8-hourly, bam. Making life difficult here before dropping down and really paying well, right? Let me look into Bitcoin. We can check into machine learning. Let's see, there's Bitcoin. Where is our specific? Let me get into this real quickly. Let's see if we have it on our large macro multi-time frame chart. Hope you guys are doing well this morning. Pleasure to stream with you. Let's look at NVDA cool off. I want to see how well that NVIDIA line will, if it will pay off. Where did we hit on NVIDIA on that daily, huh? Seems like it became widely known as like, hey, that's a short line. And it seems it made it a little bit tough, didn't it? Looking at the expression, remind yourselves that NVIDIA is in a bear flag on the 3-minute. Do we want to count this as a breakout? Shall we? Look at a bit of a frustrated breakout with the bear flag dynamic and potential to beat on NVIDIA if up and over the, please be patient 1 second if I could adjust my decimal calculation. Up and over, re-hit at preceding on a cup and handle. It's the bulls to take for a ride if they want to reinforce this level. True? Yeah. Cup at your handle. To blast through a bear flag would be quite the statement here for NVIDIA as we look at about an hour and, guys, hour and a half or so, hour and a half plus into the trade day. Nicely done. Recall that we had the expansion here, the broadening bottom formation. We see a lot of these on Bitcoin. They trade well. Taking a look at that broadening formation, taking a look at the targets to the upside just on that specific pattern alone, and a nice completion framework. And now we see that up to the 100% on the lines to the wicks. Nicely done. In line with that top line expression, level of resistance on the 3-minute hit into on the wicks, satisfied shorts parked at that level. Nice to see. So that 425.40, technically speaking, is a level of engagement for the bulls to ramp up, out, and over. That's probably the most attractive pattern in play right now, looking at NVIDIA. That's staring everybody in the face. Hello. That could be nice. You got to beat this bear flag, huh? Be a nice way to round out the morning, wouldn't it? Looking at the momentum, a little bit of dropping momentum, noted dropping momentum on that 3 minute. How's momentum looking on the 5 minute? Looks up. On the 15 minute, we are up. On the hourly, we are up. Hourly cap line doing well, huh? Bam, nice hit. Not cap line, rather fire nice top pro line. You guys got that. Looking at the 4 hourly top pro line incoming, that 4 hourly is tough. We'd love to see, again, just remind that I've said this, we'd love to see an expression, entries of longs lower on this specific level. True? Yes. Where don't you want to enter into a long higher? Just don't do it. Do not enter longs higher. Do not enter shorts lower. Try it. Try that mantra. See if you can make sure you're not doing that. And if you're doing that, it's costing you money. If you're entering into longs higher and shorts lower. True? Let a position ride if you already have an entry. All right. But entering into longs higher and shorts lower is going to cost you. Makes it miserable. I hit the wrong button again. Maybe if I just hit the other button, it'll go the right way. 0.63% from that cap line on the daily. Nicely done. Remember, it was a nice level of resistance that was hit across the top on the lines. True? Yes. Nice short opportunity. And what do we know just is frustrating beyond a little bit of a normal push here? This interpretation, right? On the breakout of said pattern, and people aren't looking at the bear flag, what happened? Well, we had a breakout, and what happened? People engaged, preceding level of resistance as support, and those are stopping out. True? Yes. On a specific level of, as the best traders on the planet want to, they don't want to buy low. They want to buy low. You know, you'll see it, huh? Preceding, this is a throwback to the preceding, just technically to go through what's going on here. Looking at an attempted breakout on the 3 minute, what can we say? Amid some falling momentum. True? Noted. As we look at the retouch, the throwback onto the expanding, broadening bottom formation, probability of this recoup in the 60s, right? 60% probability? Yeah. Do we trade on it like we own it? Not really. Do we see it with consistency? Yeah, 60 some odd percent of the time. We're heading back to this line. Okay. Agreed? Agreed. We've stayed away from rising wedges. True? Let's see. How many rising wedges have we had? Okay. Paid? True. This we didn't have. Do we have one now? Can we draw either an Elliott wave or a rising wedge feature, either a channel or a rising wedge? Can we draw one with what's going on right now? The channel formation will give us a natural attempted pickup line in the market, irrespective of what's being traded. True? Yes. We want to line out this specific pivot to the left with this specific pivot on the top. And we know that orders are naturally parked here and below. So either seeking out a channel to the extent that we have instead a wedge is a naturally deployed tactic in the market for every trader. Just is. So in the context of a throwback, this becomes relevant. What level can the bulls attempt to engage here? Congrats to anybody who did short on our specific cap line. Is this the move? Is this the daily trade on the cap line? How's your momentum? How's your confluence? Are we high or are we low? Pay attention. Are we high or are we low? Or low. Yeah, but we're coming into a short line. Okay. But where do you want to short? Where are the cat's meow? Where's the set of golden gloves, the heavyweight belt? Where is it? Hey, it's for a short, higher, right? Easy to do? No. Still potentially capable of being engaged? Sure. Let's go to the monthly. Let's see how the monthly looks. Yeah. Nice action along the top band here. This was interesting. This was an interesting engagement here. More of a mid-level, we could say, on a video looking at the monthly. Looking at a reinforcement on that specific, and a 20 on the monthly versus the weekly. We're going to line that out here on another chart here real quickly in just a bit. Deal? Deal. Nice hit on the cap line on the daily. We pay attention to such. Frustration in terms of a breakout here. We would need what to turn around? We would need some momentum to turn around. Any type of a breakout, we always say, I want to break out, confirmation, and momentum. We need momentum. Okay, so to the extent that the breakout here is frustrated by lower, not frustrated, but the breakout trader here on the cup and handle who decided I'm just going. We're going. I'm going long. Dangerous position, right? Dangerous. Let's see here. If we were to go cup and handle here, let me go ahead and line this out in terms of a coloring so you can see the background formation. I want to say good morning. Hope you're all doing well. Specific cupature handle formation. So we're compromised in terms of a clean breakout up and over for two reasons. A, really, I want to say three. Bear flag. Fact. We hit on into the express top line resistance on the wicks. Bam. Perfect. Okay. So we're compromised for fact number one being bear flag. Fact number two being expectation of rehit on orders established on the included broadening bottom formation, returning to. Agreed? Agree. Okay, so one being the bear flag, problem for the bulls. Two being what? Well, we'd like a clean breakout, but not only are orders being set below on a preceding level of resistance, but they're also being set below said level of resistance that we'd like to see reinforced and move to the upside on the preceding broadening bottom formation. True? And you can take it down to the preceding, which I'll couple with this issue, which makes it a little more dangerous, preceding level of resistance here. So we have a cascade and multiplicity of factors drawing to the downside, not only bear flag, let's say variability in terms of the market structuring around the breakout level. Those are two. And then what do we have? What would be three? We'd say, well, orders being placed below resistance, that would be number two, after that bear flag being number one. Then we would say, well, we have an issue with momentum. Agree? I think we agree. With a hammerhead situation of potential interaction at a primary level of interaction, said cap line on the daily. Is this the end-all be-all short? Is this the best short? Man, this short, you don't want to miss this short. Yeah. You want to read it into, well, on the weekly, if this were to hold and we were to go to the downside and the what were to play out. Man, come on, we're in a bear flag right now and you're looking at the weekly time frame? Come on, you got to be crazy. Listen, gosh, where did you just bring in Tesla? Where did Tesla pop up in here? Tesla trying to push up and over. Okay, we're not Tesla, we're on NVDA. Okay, so look, I'm going to make a case here for that being the end-all be-all short. You guys ready, huh? You know where I'm going. You already thought through it. This is a discussion. It's not a tutelage, mentor, it's nothing. It is literally a discussion. Well, look, hear me out, would say the trader. We have a bear flag, okay? Yes, we have some other patterns in play. Yes, we might design into somewhat of a, I don't know, symmetrical triangulation. All different types of patterns can be projected. Okay. But what I'm looking at, would say the trader, is we're in a bear flag. We could hammer to the downside. Someone who's hopping and shopping shorts right now. Okay, I hear you. We could move to the downside. We could repeat this move to the downside. Bam. All right, bear, let's talk. Okay, you want to repeat that to the downside? Yes. That's why I entered my short along the level of resistance of the channel line formation. All right, I'm listening. So what I planned to happen would say, bear trader, I plan to have a repeat, bam, of this move to the downside, of the bear flag to complete to the downside. You'd be like, man, look at this. That alone ought to be 7% in the money. Oh, nice rationale. What else would you have me consider, Mr. Bear? Right, well, check it out. We're also underneath the specific weekly. I picked up right here. We're underneath the weekly, so at least I'm situated if we have a specific move to the downside target on the weekly being the bottom side band for NVIDIA. And Mr. Bear would say, that's like a 16% move, man. Okay, we're listening. What else would you have us say? Well, I mean, so at least I have some reinforced level of approach, some calculated as kernel calculative on RSI stochastic MACD. At least I have some strategy, would say the guy who wants to go down and slam into for another 16% underneath and just fight the power of the bulls. And we would say, well, okay, Mr. Bear, you're certainly not popular around here, but I do understand where you're going. I do understand your rationale. I understand why you engaged. And he's like, I was even looking at the momentum. All right. But this is not a group of bears, but I know where you're coming from. I see that you're using our tools to engage in something, and we can be a little coy with bear and say, I would have preferred you to have engaged in this short here. And you'd be like, well, that just took too long. I missed it. I was busy. I was, taking my wife out to dinner after we went to the library or whatever it may have been. Okay, fine. I would just prefer for shorts to be entered higher. Just a general consideration. Why? Because we're lower. As a matter of fact, we are lower. We are lower. We've been going down. We are lower within this range. True? Yes. So my ideal shorts, while we're at a technical level inflection point with this 20, and again, we started the day saying what? Let's take a look at it. We are not known as a big group of bears. With that said, and I've always said the market's very particular about who it allows to short it. True or false? Yeah. The market is particular about who it allows to short it. Dedicate some energy and time to it. High risk situations can be high risk reward, I suppose. You let me know. But over the 20 on the weekly, this is what we started with. Over the 20 on the weekly, bull. Under the 20 on the weekly, bear. Long, short, constricting. We have to understand this is constricting the band, thus to the extent that we will be potentially subject to a lower target, unless the thing gets busy quickly, right? Unless NVDA and stocks and Bitcoin Bitcoin's already hit its target, it did us a favor to the downside. But yes, constriction makes a difference because as those bands are pulling in, we have a less volatility expected or measurable on our target move. Truth. Hope everybody's doing well this morning. So that would be the bear rationale. That's why he just entered into a short. He's going to bother us about it the whole time. Man, not sure he fits in here, but that's fine. We'll listen to him. He's done a good job. He had a good rationale for entering in to this equation. We'll pay enough attention to that rationale to the extent that it would need to be recreated, right? Okay, so he liked the bear flag. Touching back up in on the micro underneath the specific 20 moving average with a potential downside target. We'll give it to him. Other traders might want to see a breakdown of the bear flag. Now we're entering into the conversation of breakout trading up and over. That was a bad idea. It was, right? We understood the limiting factors here. In terms of momentum, etc. The compromise 1, 2, 3, 1 being bear flag, 2 being orders below on multivariable levels here, not a clean underside on a potential cup and handle, and 3 being that momentum, your other oscillators, right? Not having confirmation on the move to the upside, right? All manifested pretty well by that daily cap line red entry to the downside. True? Yeah. So without all the discussion or anything else or any of the technicals, or imagining Mr. Bear versus whomever, what is the takeaway? Daily cap line, capital control. Capital meaning what? Moolah, dinero. The whole notion that it could apply. That it could apply to your trading endeavors. You guys got it. Boom, boom. High level calculability, kernel equation in play. RSI stochastic MACD, yes. Unique to our group, 100%, yes. Same calculative elements employed by, for instance, Renaissance Technology. Renaissance has got like a plethora of doctors involved, like PhD level mathematical scientists. right? Rocket scientists who are not freelancing, freeloading. What are they? I'm not sure, guys. I don't know why rocket scientists wouldn't be involved in rockets. Personal complaint. Huh? Go work on rockets. I'm a big fan of deployable weaponry, etc. Just in general, I do study that. Strategic military intelligence, certified master's level, etc. That's it. Not formally affiliated with any department, agency, bureau, nor military division, domestic or abroad. That's a mouthful. Now, level of engagement potential here to see on the 15-minute. Yes. Cap line in play. Checking out. Bit of a difficult momentum ride. Flattened out, didn't it? Yep. So we get that indication in terms of, well, we're moving up on momentum. Okay, great. Where are we at on cap line? Now, let's say teaser for something incoming would be the potential for the overlap of MACD and momentum. Guys, the MACD momentum and your cap line. We're going to be exploring that, the limitations of it, etc. But to the extent that we placed RSI, stochastic, and MACD, and that's representative of volatility and momentum on the screen, we will address that fact soon. Okay? It becomes a little bit complicated. Now, in the context of Mr. Bear, who decided to short in at our specific cap line and had a differential technical rationale for doing so, great. If you don't like that hypothetical that we brought up and all the technical jargon and all the mentality and all of just the mindset it would require to enter into that short, then what do you have? You have an easy, first of all, you have a great understanding of what this line is. You do. Very good understanding of it. Yes. Now, to the extent that this is just a simple trade op, it's a simple trade opportunity. Boom, bam. Are you situated where you want to be? Is the market going to provide you with a quick and easy, no problem, high five on the way out and short, boom, down 10, 11, 15%? How frequently does it do that? Not that frequently. Okay? So expect the grind. Expect the grind. Period. Expect the lack of predictability. On Bitcoin especially. We spend so much time on Bitcoin. We love Bitcoin. Yeah? Bitcoin will handle some liquidity. Where are we at? Is it that 30-minute? Bitcoin will handle some liquidity. Indeed. Ask Elon Musk. It'll handle it on the way in and on the way out, huh? Thanks a lot, Elon. You know. Anyway, as we let's look at the 30-minute. Let's dive into, I do have this chart somewhere. That's our blackjack in action. It's relevant. I won't go through all the details on blackjack. I'm looking forward to this specific, I'm just looking forward to it, guys. Blackjack. We are blackjack experts on the charts. Let's look at Bitcoin. Where are we at? Let me pull this up on Bitcoin just to look at. Now, what is blackjack surrounding? The principle is preceding level of support or resistance that is recovered to. This is pre-prototype essentially, but looking at a flat bottom support that's recovered to, yeah, we're going to look at those pretty heavily in terms of the pattern dynamics involved. We would just call it generally blackjack. Now let's look at this 30-minute and the expressed difficulty of, we almost want to do this with some momentum in play. Let me take blackjack off for a minute there. And again, what do we see on that 30-minute? That cap line. That cap line was just engaged on the daily. Like, don't do this to us. We've never seen one of these do this. Huh? We just haven't, have we? We've seen plenty of them do that. Trade 500 of them. Probably the last thing in the world anyone wants to hear. Just trade 500 of these, it'll be easy. You think the market will know who you are if you trade 500 of them? I mean, literally, do you think your profile, your data profile and interaction with the market, that you make some sort of an impression if you trade 500 of something? Yeah. You think that's important or not? I think it's important. How well the market knows you. Okay? Looking at these are specifics on machine learning, just to take a look through. Let's take a look at this on machine learning. This is with a featured engineering, RSI, and MACD. Yes. You guys are figuring out some of this. Some of you have played around with it a little bit more. You understand kind of what's going on here. RSI and MACD featured engineering. You're either green or you're red. And you may get pushed around a bit, but it is a condition that you want to pay attention to. It's a condition. The bulls are either taking it or they're leaving it. They're leaving it. They're leaving it. The bears are taking it. The bears are taking it. The bears are taking it. Bulls, taking it, taking it, taking it, taking it. Yeah, leaving it, leaving it. Bulls are leaving it. And who's taking it? The bears, boom, are taking it. Bears are taking it, bam. A little bit of chop. Who's taking it? The bulls, boom. It's going to make sure. No, bulls are going to take it? Yeah, bam, bam. Bulls, leaving it, right? A little bit of chop here. Probably change some time frames, but it doesn't do well. Machine learning is not going to do well if you're just going to cram sideways. What's going to do well? We know what's going to do well. QKD, fire and ice. You got it. Fire and ice. I have got to publicly call out an individual. Guys, you need to know this. I'll get to that, but I need to publicly call out an individual who invited me to use their this was like 7 months ago, their specific indicator set. I was like, well, that sounds great. I'd love to do that. You know, in reality I looked at it for maybe a day and I'm like, I don't like any of this. And I can't get them to take me off their invite list. They wanted all these, like, well, we're going to do promotions and we're going to, what is it? They wanted to cooperate with our channel and our group and everything. They were all excited. And now I can't find them to take these darn useless indicators off in the background. I'm like, whatever, man. It's like, you know, leave it to the guys that didn't make great indicators to also not do a great job of just take me off the indicator. Don't put it on I don't want to be invited. Uninvite me. Do whatever needs to be done. But I appreciate the initial, and to the extent it wasn't just interruptive. I suppose I appreciate the initial opportunity to consider not cooperating with them. A little bit interesting in terms of level of support, right? Let's just note cap line feature in here. We're aware of any specific on any of these specific patterns. We are aware of the potential for any type of channel formation to frustrate in this as we were to look for price action to the downside. We're just seeing a general cool off as we get to the morning here with a residual. And this is just classic as we brought up, let's pay attention. As we brought up, let's bring our kind of high five factor out here. Let's bring up a bit of a just general retracement to get back to some bare bones, general retracement here. As we look at this specific move here, as we had already discussed on, let's say, a similarity to the chart pattern on NVIDIA last week, just how this setup reminded us of NVIDIA. Can it remind us any more of NVIDIA right now? No way. What was NVIDIA doing? Go down to fill a gap nearly, right? Down and below, what did it do? You guys remember exactly. Difficult move. You got it. What did we hit up and through? Are we guaranteed to do that on Bitcoin? You got to be, no. Guys, no. What's 75%? You're 25% absolutely 100% certain that it's not going to go your way 25% of the time, right? You got it. Without a doubt. What does 75% mean to you? Well, 25% of the time, you're 100% certain that it's not going to go your way. We'll take it. We'll trade it. We'll dance with that 75% probability. True? Yes. So the analogy to NVIDIA couldn't be much better, could it? Noted. Sitting on the 786 to the 86. Looking at NVIDIA, looking at a Tesla. Let's see what we got going on. Recoup just a bit through. Let's see where we're at on, let's get into, hope you guys are doing well. Hourly 20 moving average engaged, noted on Tesla, right? Looking at an attempt, it's really like a stall out feature, isn't it? I mean, it's just slow. Busted pattern, about lunchtime in New York. True for anybody who was going to lunch. And now we're trying to pick up in this context. So let's see Tesla. We're going to differentiate NVIDIA. NVIDIA pouring down through, bear flag, true? Yeah. Green byline on the 3-minute. Watch the momentum. Yes. Momentum is something you guys normally will view in the background. And I decided to throw it up front and center just so that we can't ignore it, without a doubt. So we can't ignore it. Tesla doesn't express the same dynamics necessarily as we look at a potential breakout here, does it? What's differentiated on Tesla vis-a-vis or in comparison to NVIDIA? Well, NVIDIA we see the same drop in momentum, boom. True? Yes. We see a differentiation in terms of we didn't really fill out that bear flag on Tesla, did we? In fact, we did not. We don't have that upward sloping channel, which is required a channel to cut against the trend. The trend being down, we need a channel formation to the upside. Reverse is true for a bull flag. So, Tesla pushing into the preceding level of resistance, 3-minute engagement on the 20 moving average below the 20, below the cap line. This will be the crux of the situation here. The cap line, that confluent cap, and 20 moving average. Let's take a look. Let's dig down into 30-second. You know, a certain time of day arrives when we literally just say, well, let's dig into the 30-second. And it could mean what at that point? We're in for a long haul. Yes? True. True. So push on in through a level of resistance, flip support. Yes. Do we have an ascending triangle? You want to call it triple bottom ascending triangle? Here's where the day starts. I'm telling you, this is where it starts. Looking at, well, let's dig into the 30-second. What's the problem with the 30-second? We could be here for days. I'm not kidding you. We have the stamina here. You know that. We could be here for days. I'm telling you, just in terms of the stream, we could be. It's trading, guys, with more volatility, a little bit more excitement on the screen, right? Yeah. Okay. What's the UCIC? You know, targets in play. You understand, it's the afternoon delight, New York, saying you want to trade. You're ready to trade. You want to trade. You want to trade Tesla or NVIDIA, right? Because what happened this morning? Well, NVIDIA popped up and around. NVIDIA heading back up to where? The daily. Okay, we're going to have to talk to that guy who wants that short underneath the weekly, huh? We're going to have to talk to him. I wonder how many bites of the apple the guy will take underneath the weekly 20 moving average on NVIDIA. Is he determined to get it right? He's going to get it right. You think he got the 4-hourly right on NVIDIA? Probably. You think he got the 8-hourly right? Probably. You think he's good at what he does? We hope so. We hope so. How many bites of the apple you think he's going to take in terms of trying to get and position a level underneath that 20 moving average on the weekly on NVIDIA? You think it's just one? One quick, easy move? No. He's constantly pounding into and looking at, this is Tesla on the screen, constantly looking at, negotiating into position based on the potential for a move. The guy is literally employed, likely, at a desk, likely. That is his job, likely. Full time. No gym break, no maybe coffee, maybe lunch. Smart little whippet kid, huh? Who's at the desk. He could be VP and 48 years old or 52 years old and been playing this game a long time. He's going to get it and still get it. You don't know. But the market has a way of making people work for position. Can you schedule it in? Can you algorithmically program it? Sure. Yeah. Program in your cap line? Sure. Can you program in your 20 moving average? Sure. You think those guys sitting at those desks are just going to trust the computer, huh? Hey, no problem. Let Watson do it for me. I'm going to let Sammy with OpenAI do it for me. Yeah, why not? I trust that kid. Brand new company. I'm going to trust him with the lifeblood of our company. Why not? Guy's been around 20, 30 years, probably has learned not to do that. So Those positions are coveted trades, either from the top or from a mid-level solution like we're looking at now on that weekly 20 moving average. It's easy to say, well, over the 20, I want to be long, under the 20, I want to be short. It's easy to say. Can you program it in? Yes. Do you want to achieve additional proficiency over or under? Is there some alpha to catch in the mix? What do you think? Yeah, there's some alpha to catch in the mix, right? What's the breakout here required? 247.7. 247.7. True? Yes. Bear flag, not particularly. Potential for breakdown? What do we got our eyes on for Tesla? Flat bottom preceding level of resistance, right? We just got it. It's noted. Where's our momentum? Rounding off a touch. True? Yes. We needed to spike back and roll. Actually, it's heading positive. Okay. Micro bull flag. Engagement on what? We are attempting to engage on our cap line. True? Yes. On the 32nd. On the 32nd. That's a 0.1% move from cap line, okay? Tight moves, 30-second time frame. Can you trade that? Sure. Can you trade that cap line? Sure. On the 32nd. But you have to know your spread. You got to know what's going on right now. 100% on a breakout, what's going on? What's going on? You know where are the orders at? Boom. You got it? Where are the orders at? And I know it's difficult because it's not an, first of all, we're very tightly wound into the 32nd. True? Yes. Yes. We're on the 32nd. So if you get a pop back into 23.6, what's that require? We've got to have enough of a move to trade. It's 0.09%. We're on the micro. Can you trade at 0.08%? It's tight. I mean, it's tight. Can you trade, guys, 247.65 to 247.88? Can you trade 22 cents on Tesla? You better be good. You better be really good to trade 22 cents on Tesla. I'll trade 22 cents on Tesla. Okay, great. I'll give you a billion shares. I don't want a 22% hike on my product. Okay, got you. Think of the volume running through an exchange. Yep. Think of their calculatives and the decisions that they're making. Yeah. They're going to trade out. They're going to run through their order books, a million orders, a million shares of Tesla. Huh? They're going to schedule you in, no problem. Hey, we got a guy out of San Diego or out of New York or Palm Beach. A little kid out of Palm Beach. He wants to cut in a spread of 22 cents. No problem. Just put him right into the mix with what we're doing as the exchange. You're going to cut in their 22 cents, right? They want to cut 22%, a different percentage, different discussion. But yeah, the exchange wants their little cut, so they're just going to cut you in, huh? No problem. We got a little guy in Palm Beach. He wants to make us 22 cents along with us, huh? Yes, understand the dynamic. Understand what's being discussed. What do we hit into? We're seeing that 618 today, aren't we? Quite a few times. Bam, right into golden pocket. That's nice. Maximum completions to what? 50%. What was that on the take? That was 0.17.2. Okay. 0.21. Where are the orders? Now, the guy who, again, where I get cut off and sanctioned here. There we go. Boom. To the upside. Don't they apply sanctions? I think they apply sanctions to like foreign, like hostile countries. Like if you're talking about fellow YouTubers and you get sanctioned, like, okay. Like, okay. Isn't that like foreign hostile countries who need like control measurements instituted? Anyway, I'm sure there's an equal level of authority there. Unfortunately, maybe there is. Who knows? Looking at the dynamic of the full completion to the upside, what do we know? We know that this plays less frequently than this. True. You believe you sit there and you tell your audience, you just question whether or not they should be suspicious of anyone who's not operating in line with the maximum probabilities in the market on anything. You even express that and you get cut off. You literally have your internet connection seized. Wow. Huh? I'm sure the individual at said desk, I'm sure, has even read the Encyclopedia of Chart Patterns, even knows of Tom Bukowski, much less has any personal dialogue with him, much less has any kind of standing or footing grounds to work into an objective assessment of that statement I was making. Or maybe not. Or we're just supposed to be nice. I forgot that to the nice guy go the spoils in the market. You get rewarded for being kind. That must be it. We wake up to be kind to everybody in the market. Huh? Yeah. It's like a philanthropic event. I see. Fantastic. It's a philanthropic endeavor. Maybe not, guys. It's a tough market. I know a lot of tough traders. So to water down the level of competition and the sentiment that should be expressed between you and how competitive this market is and who should be making it and not, to not be able to have an opinion on that defies the whole level of competition and the underwriting of the market, period. With that said, directing attention into what? Into the probabilities, in a framework that makes this worth doing. And if you can't do that, good gosh, noted. Looking at a nice retest on Tesla. Let's differentiate with orders pick up, reinforcement on the 20 moving average, noted. And as we would look at momentum curling back around, trying to curl back around on that 3 minute. Let's look at that lower time frame. Crawling up and along. Nice ID on said pattern, huh? Remember, you're on the 30-second when you're on the 30-second, bottom line. Let me change that back over to the 3 minute if we can. Not that one, that's the 5 minute. Let's change this to the 3 minute, there we go. So that's a nice level of re-engagement on a breakout. We agree? We concur. And what do we have? Reinforcement in line with specific level of resistance. I've had my internet cut out literally before when I've noticed problems in the price action. Literal discrepancies between the time frames on prices of crypto. That's not noteworthy at all, is it? I've literally had my internet blocked out at the house, literally when I'm explaining, look, the pricing is wrong, cross time frame. Literally, my internet is seized. Isn't that great? Isn't that just a reinforcement of the greatness of the markets with which we're, I mean, come on. I mean, it's not like you're trying to make a negative difference in the world. I'm trying to point out the fact that there's the wrong pricing on the screen. God forbid you help someone. Come on, guys. Come on. That's a fact, literally. It's literally recorded on YouTube. The outage is literally recorded on YouTube of me doing that and having the internet seized at my house. Literally just cut off. Like, are you trying to make a point? Maybe trying to make a point. Well, let's just cut the internet off and I guess we'll have this marked. Just weird stuff, guys, weird stuff. Get along with everybody you meet. That's my key thing, but be very discriminating who you affiliate yourself with. Be very discriminating, I would just say, in terms of, and not as that term is appreciated in terms of equal rights or otherwise, never. I mean, we're an exclusive club, but in terms of, be very discerning is maybe the best word. In terms of discriminating, we would never do that. Personally, people who know me, without a doubt, know that 110 million%, without a doubt. Be discerning who you spend your time with. Be critical of what's thrown in front of your face, in terms of even pricing, even charts, even trade dynamics, purported returns, anything that's put in front of you. Let's take a look at this. It's an interesting day and era. So Tesla, to the extent, and we're just going to mark this and tag this, to the extent that she wants to perform back to this preceding level of support that was at least a fly in the ointment. That was a little bit difficult. One of the reasons I said, let's just go ahead and put momentum all over the place. to the extent that we are, and all my personal commentary aside, I'll guarantee I'm one of the least important people that you will interface with. That will just be the truth. What's the most important thing? Trades. Who's most important? I would say John J. Murphy. Who's more important? I would say equally Tom Bukowski, right? My interpretations thereof may frustrate me to no end as I assess the overall market. It just may. May get, wildly riled up about probabilities and how it's just impossible to see returns and if you're bucking the trend. Yes. Don't buck the trend. It's impossible to buck the trend and just, Anyway, looking at, you guys going to see the movie, hopefully, The Dumb Money? I don't know. Maybe. We've seen quite a bit go on, haven't we? So looking at this a little bit differentiated here, I've drawn a flat top here. To the extent that we have a cupature and additional handle, we see these walk their way up, okay? Included patterning here on Tesla, just to note what the market's throwing at us. For all I know, people are marking and tagging an event with a blackout situation. Who knows? I mean, that'd be cool if you had the button to black someone's house out with the internet. Huh? That's interesting. I have no idea who would have that ability. Interesting though, huh? I'm glad that none of you have that button at your house. That's a good thing, huh? Do not deploy this on your neighbors. Looking at the specific, why am I doing this? Is it a natural cup and handle? No. Is this a deviated pattern to start with? Yes. As we were to look at a reconfirmation, it's being respected to an extent, and this irregular, I don't want to call it a cupature formation. We just see these quite frequently. We saw the defective ascending triangulation, okay, and the fact that it was a bit irrelevant or imperfect to me for the reasons that I went through and really described. Level of resistance, boom. By the way, I didn't see many of you at the air show this weekend. It's pretty cool. F-35. Nice to see that thing just kind of relax in the air and float in front of you. Pretty cool deal. Got some cool video. Posted it to VIP. Very cool stuff. A lot of people out there. There's something else. So looking at this framework, we discussed I prefer interaction between bulls, bears, then bears, instead of bulls, bears, bulls, up and out. My preference, all right? With that said, still seeing an attempt to reinforce this line. NVDA, looks like Bitcoin is the one bit being drowned out this morning. Let's see. Yes, amidst some momentum concerns, right? Let's take a look at the 30-minute. Let's take a look at the 30-minute on Bitcoin. Just a sluggish slide. We see this without a doubt. Remember, 25% chance of non-performance. But is it over? Best thing about these patterns, it's really not over. Level of resistance, that being a target for the bulls. Just watch it play out. Very few of these have zero complications. If you guys want to drop in the commentary, maybe your best or your most favorite piece of military equipment, that'd be cool. That F-35 is pretty sweet. Joint Strike Fighter, huh? Shout out to all the Joint Forces. Joint Forces International. Hope you guys are doing well. We appreciate anyone in service, domestic and joint forces. That Joint Strike Fighter is a cool one. I would not want to be on the other end or the wrong end, the receiving end of that. It makes a statement, doesn't it? It's got some power to it. Looking at the pull down in terms of, let's take a look here. On the weekly, Bitcoin has already hit that lower Bollinger Band. That's not the case on NVIDIA. All right, not the case on NVIDIA. We just set underneath about a couple hours here into the trading session. We'll probably let this string go here in just a bit. But just want to reinforce some ideas and principles, such as, do we have confirmation right now? Bull on NVIDIA on the 3-minute, bear on the 5-minute. Bull on the 15-minute in terms of momentum, right? And what does that look like on the 5-minute? Looks like we're up, out, and over, and bullish technically, and bearish. There we go. In flux. Be aware that these conditions can be setting, right? Immediately. As we look at the hourly, potential contact with a level that's paid multiple times. How many times is that one hourly cap line paid on NVIDIA? You got it. 1, 2. Oh, this is not for the guy, is it? Oh no, this is the guy. He's going to come back. And whichever the trader that was that decided, right, that we explored the rationale of, that decided, come on, huh? That he was going to enter on the cap line. And the fun times, I would say this, guys. If you're focused on the short, like it would require in terms of the full expression, whatever that would be, if you would look at someone that were fully dedicated to the 20 moving average over or under condition on the weekly as being long or short, okay, over or under respectively, and the negotiation of this position in this zone, remember the rationale would be, well, we're in a bear flag, right? This contact point is back up and two, and we can get an idea of exactly where we are. Remember that TradingView will give you the crosshair. Okay, so you have to pay attention on this, but on the weekly here, big screen TV required. Okay, on the weekly, I'm gonna go in here, I can change the color of my crosshair a bit. Let's get into this and see if I can enhance this view for you a little bit. Watermark crosshair, let me make this bright yellow or something along the lines. Let's make it a bright green so we can see it. The specific here, the 20 moving average on the weekly, and it's only going to change it here, huh? But it is, do you see when we're up along that top of the bear flag, here in this zone, we're just slightly over that 20 moving average down here. Do you see that? So we operated just as a small push up and over, which is a really important thing for us to consider. When we look at the specific weekly having pushed up and over, and you say, well, I don't know. I mean, look at this. It wasn't precise. What saved the day in terms of that entry? What really saved the day here? Well, if you look at the lower time frames, that's why I always say, well, we dig into the lower time frames, it's going to direct where price goes, right? It's going to let us, the macro is going to fall in line with the micro, which is why we pay attention to that micro. So this looks like a push. You had to hold, you had to really pay attention to it if you're just operating on the weekly. But all of these are going to have some pattern interaction at the lower time frames. True? Yes. Noted. Noted. So just take that out of this discussion, if nothing more. Looking at the 20, we started off the stream like that. Under, bearish. Over, bullish. Over the 20, we're going to be bullish, long. Under the 20, we're going to be bearish, short. Per whom? Per me? No. According to me? No. According to New York Institute of Finance. Generally speaking, confirmation, absolutely. What's confirmation? It is agreement on all your time frames of all your indicators. Absolutely, without a doubt. So looking at NVIDIA, the guy who is short on the daily cap line found himself nicely coordinated with a rehit on the 20 moving average on the weekly, yes, and knows that there may be an opportunity, or has been an opportunity, for side trades along the specific cap line on the hourly. True. We got it. Rebound hit to the top side band after contact with the 20 moving average. Cap line potentially compromised a bit with the proximity of the specific 20 moving average below. Sure. As you're looking for your perfect trades, just realize that the concept may or may not exist. What will exist is the concept of more perfect trades or less perfect trades. Every now and then we get one and was just like, look at this thing. It's like it's the cover. This thing's like a cover. It's like a cover picture. Now, if you entered on the specific, let me challenge you one thing. If you entered on the specific short line here, kernel calculative, if you entered on that kernel calculative, the cap line on the daily, let me ask you, or the bear flag, let me ask you, did you enter in one position? Or did you enter in a potential carry position and a potential flash trade? Can you differentiate between a position you'd like to carry potentially on the way down and something you just wanted to take profit on? And if you don't have two positions that were entered into at this level, based on the bear flag or otherwise, or even momentum dropping would have gotten you on that micro consideration on the breakout, that would have been tough to establish on that micro breakout feature, and let's not get too complicated. Do you have two positions right now, or do you have one, or do you have none? Did you say, no, I don't want this trade? I don't want it. I want to beat the bear flag. If you're the type of trader that continually wants to beat bear flags, that's it. I'm here, I'm going to beat the bear flag. Just recognize that you fall into that camp. Recognize that you're not the guy that we're going to say is the bear of the week that's going to just hammer into this no matter what. Right? He's shopping for, his whole life revolves around finding the short below the specific 20 moving average. He'll try it for a week here, 2 weeks or 3 weeks. He may not get it. He'll try it the next time around. If it stays there for 2 or 3 weeks, he's gonna follow this thing for 2 or 3 weeks and try and find the turn on this. It's not necessarily an easy point and shoot target where, oh, hey, such and such got a great trade. Hey, such and such got a great trade. This is a dynamic in play. Technically, the bears are underperforming based on the preceding 20 time intervals on the daily, right? But there's a projected target to the downside. The guy who wants that trade is going to potentially focus on it, nearly just avidly, wouldn't you say? A lot of hard work in the markets. Looking at what did we have here? What did we have? We had a green pickup line on the weekly. True? True. It traded, did it not? It did. Bittersweet, we kind of would have liked to have gotten into. We really would have liked to have gotten into this lower section of demand features. They're still in play. What traded? The green buy line on the weekly. True? Yes. Yes. Lower pro line on the 15-minute engaged. Yes, on fire and ice. You guys know the routine. Correcto. Yes, you do. Let's look at Tesla. How's Tesla doing? Rehit back into level of resistance. Noted. Would like to see a hit back at the preceding failed specific apex. Would like to see that. Will we get it? Let's see what we got here being thrown at us a bit. True or false? You guys assess this. Anytime we fail an ascending triangle, what are we looking at? Now note this, what didn't trade? What hasn't traded? And what do we get in here? First of all, let's talk about this. In 30 seconds, what did you get? Return to at least flat top resistance, true. Completion up and above, eyeball it 100%. Yes? What's next in line? Potentially, what's next in line, aside from flat bottom support notion in here, the notion thereof, we'll be looking at some sort of a configuration in line with such. Fact. So, in line with setting a flat bottom support, demand level being recognized or not, the throwback to said preceding flat top resistance, which we traded and played out with the head and shoulders along the top. We note no recovery to the head and shoulders thus far. True. We had noted as well flat top resistance here below as a demand level. Just note such. Note such. Seeing a litmus test of the 20 moving average on the 30 second. Remember, this is micro time frame, guys. On the 30 second, looking to engage. It's not whether or not there are orders down below on this carry down level of support. It's not, guys, whether or not there are. There are. Okay? So we're seeing which is important for our purposes of understanding of what we've done this morning. First of all, the ascending triangle on Tesla had some defects. Just note such. based upon backtesting the last 40 years of information that is statistically relevant. That is relevant according to the authorities. Yes. So we're seeing the play out of this internalized pattern, right? Bulls could have taken things away, and they have failed to do so on a pattern which we had some complaints on. True? Yes. Now, the issue about any rising wedge feature can arise in the context of a failed ascending triangle. Bust an ascending triangle, what can you run into? A rising wedge. Ascending triangle bullish, busted ascending triangle bearish, because you have a resulting ascending wedge. True. This 3-minute noted has a little bit different of a pickup line in this zone. Return to preceding flat bottom or flat top resistance on that, is it 30 seconds? Is in play. Careful about your momentum on lower time frames and the potential for a divergence, okay? So we are on a bit of a float here underneath that level of engagement on NVIDIA on the daily. Did we get that right? I believe so. On the daily, we're in a bit of a warning pattern, okay, on the NASDAQ. We're in a bit of a warning scenario. Let's take a look at the NASDAQ and see if it can tell us anything interesting about what could be driving the markets. Ideally, we want what? Ideally, we'd like a clean candle set where underneath a level of support. We don't like this candle framework. We don't necessarily like this level of support. We expect some interaction at that level, but give us some clean technicals would be ideal, wouldn't it? Wouldn't it be nice to see some clean technicals? Now this, on the daily, is a clarifying moment. We concur? We concur. And there we go. There we go. So we'd like a clean candle set underneath, wouldn't we? What's the issue? We're running directly into a demand zone. Tricky business? A bit. A bit. On the lines, we know what we're looking at, correct? Now, we have been through the details on, you got it, levels of engagement. Who likes descending triangles? Bulls love descending triangles. Why? They offer an opportunity to enter in lower, bam, 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 on the NASDAQ. Just looking at it, guys. Potential for a throwback to preceding level of support. Yes, a little bit of pressure on the market, huh? For anyone who's overexposed in the market, that is just a very, very difficult chart to look at. True? You got it. Let's see where we're at here. Now, why? Let me bring up that red. There we go. I like the red background demarcation here because we've got an indication of when we went bearish on the momentum, meaning we started to round down. That pivot structure in terms of that momentum, boom, to the downside on the NASDAQ played very well. You can also overlay on that the specific cap line feature, boom, 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 boom. So when I discuss a preference personally that is this the time to short every time? Are we low? Yes. Are we in a potential breakout? Yes. Is there going to be a catch of an opportunity for the market to tell you, oh, no, don't short there. You're just at a demand side pickup. Almost every time, guys. Every now and then we see extremely clean patterns. We like them. We understand volatility. That's why we're attracted to Bitcoin, without a doubt. These are just commentaries on equities. Let's just say they're commentaries on equities. Okay? So a bit of an aggressive look here at the patterning and play for the NASDAQ. Head and shoulders, yes. Descending triangle, yes. Bulls interested? You betcha. You betcha. Right? Let me back off this and see if I can swing this back over to Tesla. These are important moments for the market, without a doubt. Let me get into the, let's see what we got. Technical target to the upside. Now let's discuss this. If you have a target, what do you need to get to your target? As we look at the specific 15-minute rather, engage, a little ricochet action between the 15-minute 20 moving average and our cap line. That momentum, we can also almost align it with momentum. It's got a little bit of a advantage on momentum, calculatively. Looking at the hourly again, 20 moving average on Tesla, noted. As we were to discuss two issues. One, do you have a target to the upside or a target to the downside? If you have a target to the upside or to the downside, what do you need ideally to get to your target? You need a pattern to get to your target. If you can lay your life out with a pattern to get to every target, your life's going to be a lot easier. Yes, 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 yes. Number one, find a target. Number two, find a pattern to get you to your target. And that is a great approach, and start to increasing your odds of, I would say this, don't ever blindly trade in a direction. You can try it, but unless you're doing like a randomized forest, a random forest is it's in the genre of machine learning. So to the extent that you have a randomized forest with, I know it sounds crazy, but it's, you know, they'll, the notion is, built one indicator based on it. The notion that it's randomized, but to the extent that there are shared features, right? To the extent that there can be some reinforced learning that occurs along the way based upon actionable instances or other characteristics brought into the framework of the quote-unquote shared dynamics or attributes of said, I don't want to call it a forest again, it sounds weird, huh? Random forest. It is just, it's a machine learning approach, okay? You would look at features, you would look at reinforced learning as a component thereof. You may want the machine to learn, specifically, you may want your code and your machine to learn, let's say, based upon a reinforced learning algorithm that's compartmentalized or conjoined with a randomized feature, okay? So some of you cannot trade randomly. Some of you will see the same patterns and you'll see the same dynamics and you'll hit the same button every time. So stepping away from that and just getting to a randomized element can put you at 50%. You may be at 20% on your trades right now. Literally a completely randomized function can put you at a higher win rate than where you are right now. If you're at a 20%, right? If you're winning 20% of your trades, you have the same habitual problems every single time. So becoming completely randomized can get you to 50%. We can do that. I've got the code for a random forest complete 50%, no problem, based on machine learning, period. Get you out of the 20% rut. Like, I can't get anything right. Well, your habits in the market, the way you're interacting with it, hitting the same button every time, the same button every time. Like, okay, 50% is improvement. If you can add a reinforced, really features to that code and a reinforced learning mechanism to that, where your code begins to learn based upon preceding price action relative to a few of the dynamics, technical dynamics you're putting into the equation, it becomes interesting. So just note the language, note that we're discussing it because we have an advanced approach to the market, and I want you to be able to appreciate some of the language involved with some of the dynamics that are in play as we see AI really full force into the dynamics of the markets at whole, of the corporate structure. AI is really enabling us to become more technically advanced in our approach to the markets. And I don't know that you could make it without it. And it's probably inviting some additional players, especially with programming background or consulting experience, to participate. You will say that you did it, right? In terms of the dynamics. We're looking at the Tesla chart, okay? We'd like that momentum to turn around in the 3-minute. We're bearish. What's that? Why am I on the daily? Let's throw that into the specific 5-minute bearish. The specific 5, we got to go 15-minute bearish. Hourly, we're still looking bullish, but how are we looking bullish on the hourly? Now, it's one thing to say, well, we're bullish in terms of momentum on the hourly. All right, pay attention. Bam, bam. What was the interrupting force here? The 20 moving average. So yeah, we're still bullish. We're heading up on momentum, but understand that the key levels that we have been focused on are still in play directly. You got it, okay? Daily. Remember the cross under and near threshold hit. You don't want to miss this. What's the percentage completion? We talk about percentage completions on the Bollinger Bands. This is going to be a tough roller to the downside on momentum. We do not want to roll red if you're a bull. You do not want to roll in hard to the red here, huh? She'll do that, huh? What does she like to do afterwards? I don't know, guys. Rarely a lost cause with Tesla. We do have this really interesting lower line of interest, don't we? Without a doubt, we've got that lower level of interest. Without a doubt. But noting this rollover, seeing the opportunity to be a part of longs and shorts, big part of the market, just generally, big part of the market. Don't look bullish to me now. I just have to say that. Don't look bullish to me now, NVIDIA. Wouldn't that just be it? Like, why do you look bullish right here? Don't do that to me. No, don't do that. The lines that I have drawn out are showing me a bit of an expression of wouldn't that just be perfect? Well, of course this looks bullish. You're tucked underneath the level of preceding resistance. Really two of them. You've capitulated below two levels of preceding resistance that failed to confirm as support. So of course you're looking bullish. It was a dynamic in play where I'm just saying that there may be some expanding volatility here. Okay, let's look at this. Why would that just immediately look like it's because of the crosshairs that we're caught up into? I'm going to definitely couch that statement. Oh, of course you look bullish. Okay, let's see what we've got on any kind of expanding volatility. Yeah, do not hit the trigger on the guys. If anything, oh, that looks bullish. Now it's more of a coy statement, and I'm somewhat just enjoying the fact that that would be bullish. Of course, we're underneath two previous lines of resistance. Like that's the last time that you would just say, oh yeah, we're definitely bullish. Then we've got it there. Seeing a constriction here. Okay, seeing a constriction on NVIDIA. Let's just note that we saw a constriction in price action. And these are measurable through calculatives, you know that. But seeing a constriction here, there we go. I'm looking for an expansion here. And I would really prefer, we would like a clean take. Let's see this. We have the potential, were it not for this level of resistance, for what? We have a designated level of resistance to the upside and a level of support to the downside. True? True. So to the extent that we're looking at a micro breakout of a cup and handle here now, we know how they've been performing, okay? But to the extent that we don't have the interruptive layer here with the preceding level of resistance carry through, this is a cleaner look at something which could be expressive in terms of some expanding volatility, potentially in the form of a broadening bottom formation, which are typically bullish. True? Yes. So it's the classic bell pattern formation that we're looking at, not without getting really aggressive on the drawing board. And NVIDIA has been requiring us to be almost nearly exploratory in terms of the levels of expansion that we are being driven into. 1, 2 on that. Okay. After your constrictions as such along the top, look for some expansions and opportunity to participate as such. We'll see at this level of resistance. Again, it's a hurdle that the bulls are not excited about. This is very much in flux here, right? A lot of just ongoing contravention here in terms of the dynamics in play. Seeing the curvature and handle play out with breakout, noted. We go to hour, and it wants to hop that level of resistance. Looking at the framework of level of resistance here and a return ultimately to this line. We'll get into the dynamics. It is expanding volatility. What we will say is the following. We don't have an ideal construction along this way. We want support, bulls hand off to the bears, to the bulls to the bears, and then up and around, right? We want to clear, aside from this handoff here, bulls to bears. That's real tight, guys. You agree? Big screen TV required, right? Bull to bear handoff, that's tight, right? Sliding bulls off to a bear handoff. So we're formulating some additional patterns. This specific level of resistance is noted, that cross resistance along the way with hit nearly right into that 50%, just noted, right? As we're trying to reinforce up and above that preceding level of resistance to the left end. Essentially, you'd like to reconfirm this as a level of support. That's what makes it kind of funny, right? We're underneath a preceding level of reinforceable resistance. Like bulls want to reinforce that here as a level of support. Part of the dynamics that we're pushing down, NVDA in terms of those specific, the specific entry levels for the bulls below that breakout dynamic. True? Yeah. And we've fallen into what? Descending wedge. Fact? Yeah. Where are the orders? Yep. Long support and lower. After about a hit in the 50%, again, max probability. The micro stuff here, looking at this micro 0.2, the trade, yeah. Tight stuff. Tightly wound. Let's look into the 3-minute real quickly. Hope you guys appreciate a little bit of extra just technical work as we look through things. I will just tell Bukowski, I'm just going to be filming a lot of technical reinforcement work so that you can potentially include it into your next book. I'll just tell Tom that. And then we can get past the whole, taboo of dealing with equities or dealing with this or that or whatever we're dealing with. We'll just tell Tom. How about someone email him? We'll email him. Say, Tom, I decided just to film a lot of technically applicable work, and we're just going to be filming so that you can review it if need be, or you can hire someone to review it and see what we're focused on technically. Maybe you want to include some in your next book. That'd be cool. We've already shared with him some of what we have been working on, and it got his attention enough to have him interface with me. So it was good. So that'd be a good, good reason for us to. That's a good. We'll discuss that. I will discuss that. He's a good guy, for all intents and purposes that I know him for. Which in the market, in terms of technically, he is the guy to. He'd be the guy to know. Good guy. Looking at the attempt to pick up on the 3-minute cap line. You got it. Where is our Bollinger Band? Boom. Let's bring that Bollinger back on. It gets a little bit crowded in here. I take the Bollinger Band off at times. You can always right click on a multi-time frame sequence and put apply these indicators to entire layout. Boom. Then you'll get all the indicators flowing over to all of the time frames. So you can adjust one perfectly the way you want it with all the indicators. You can right click on it, hit apply these indicators to entire layout. There you go. You got it? Good, we got it. Let's take a look at, so running into, you can just see on the 5-minute running into cap line. You see on the 15-minute running into cap line. Retesting the 20 moving average on the 15-minute. You can see that hourly with that perfect pickup. You remind that perfect pickup did trade just slightly there on that cap line. Let's look at that 4-hourly. And just see a consistency here or an inconsistency in terms of level of confirmation. You got it. And we'll roll in about 5 minutes here. We'll go hit the gym, hit the iron for a minute. There will be no Pilates for me. That's okay. Some of you are into Pilates. Some of you girls are into Pilates. That's fantastic. Congratulations on maintaining your health. Excelling in every regard that you can. Pretty cool stuff. Maybe additional guys in your gym or whatnot that are interested in trading, or maybe be additional people in your Pilates class that are interested in trading. Who knows? It'd be great to bring that mindset to you know, into trading. Whether I don't want to, we don't need to be full of yogis, yogis, but just releasing your stress in a positive way in the gym is important. Don't let it bottle up. Yeah, make sure you hit that gym. Don't let your stress bottle up, guys. It's not worth it. So express it in the gym. If you're a girl, you don't want to get all buffed out. Maybe Pilates is the way for you. That's cool. Hey, cool stuff. Nice re-hit on that 3-minute noted retouch on that specific apex here. NVIDIA's been just really tough about hitting up and back into and leaving behind some patterns. Remember, if you have a target, what do you want? If you have a target, you want a pattern to get to your target. Yes, and ideally you want to hit that 50% maximum probability. You got it. You got it. Now, you need more than just this. We don't like the level of resistance complication across here on the top, do we? We don't like that, okay, dynamic. We pay attention whenever we start to kind of see something like this. If we start to see a leveling off or any kind of demand come into the equation, we just pay attention to it. If it's a bit rounded, I'm ready for some sort of a curvature event, generally speaking. But it's not a dispositive move. It's just not. It's just not a dispositive move. You know that. It's not a dispositive condition that we're rounding here and around. It's just not. It'll get your eye. You know that. It will get your eye. Let it get your eye a little bit. Let it start explaining how it wants to behave generally when it gives you that type of feature. Interesting kind of spill out here with the potential for a rounding formation. On NVIDIA. This is just the crux. This is literally the bulls looking at things and saying, okay, we're going to give this up or we're not. So this is a mid-level interaction where we have got some interest by the bulls and maybe some decisions being made in terms of what direction. People, it's technically, seems technically proficient in the following regard, that it would encourage the bulls to really take some positions underneath or immediately as price is being dictated along a macro level of support. It seems to be accomplishing that quite well. Just the general look of it is relatively serious, in line with, you got it, in line with a relatively serious level of interaction here on the NASDAQ. Let me do this real quickly, weekly, daily. Here we go. This is the NASDAQ. And we could probably make a few adjustments. There you go. Something along those lines. Flat bottom. You guys get it. Blackjack, blackjack, bam, bam. On the weekly. Nicely done. Side indicator sets, etc. Shout out again to Lucas. What's up, Lucas? Switzerland in the house. Hope all is well. Thanks for checking in with your note. I will read it here in a bit. We're going to sign off, let you guys trade, do what it is that you do. Be prepared for the following. As we see Tesla attempting to pick up, we're noticing the following. Let's notice the following before we get up, out, and over. And I hope you guys are having a great day. Hopefully these streams are contributing to you having a great day, whoever you are. Even if you happen to be the person who inadvertently knocked out my internet. I hope you're having a great day. Looking at this, what do we got? We have move, consolidation, move, consolidation. Okay, really the drop is part of that consolidation. Drop, consolidation, move, consolidation. We have seen these recently on Bitcoin that we paid quite a bit of attention to. And we just need to pay attention to the overriding level of concern or overriding pattern that's being demonstrated. When we have this level of technical interaction in the form of a rising wedge, what do we typically look for? We would like to see some sort of a fan dynamic in play. You say, well, do we have an inverse head and shoulders? Technically, very poorly framed. Okay. Do we have and you can trade it like, it can be traded like, dare I say even you can trade this like, I don't want to tell you guys you can trade, I mean, it can be traded as such, as a really deficient curvature and handle. We just see so many V bottoms that aren't really well designated in terms of a left shoulder and a right shoulder. Do we want to make this a really deficient inverse head and shoulders? We can. Let's see what that would look like. It would look something like this. Okay? And you're going to be jealous of what? A flat top. Resistance, which we had down in this zone. You're going to be jealous of it because these don't statistically play out as strongly as a non-angled inverse head and shoulders. Okay? We have a shared dynamic of a rising wedge. Okay? With that said, we are engaged at and note this, parallel carry down of resistance to support, traded. Yes? In the context of the move to the upside, we just have, and this is you have to look at what we've been doing. We had a level to beat here. We reconfirmed, beat it to an extent, recapitulated. We had a level to beat here. We beat such to a percentage, we nearly capitulated. And so we have another level to beat here as the bulls are trying to climb the stairs up and over now that 248.94 on Tesla. Agreed, huh? A little bit of price action today, a few great moves. What was the key consideration? First few minutes, right? I didn't want to simply leave it, but look at it statistically. You guys let me know what you think. And we'll measure this just to see the statistics, and who knows, maybe Tom will like that part of the back testing into the percentage of opens that open to the downside that recover within the first 5 minutes and offer a trade to the participants. I'd like to know that. Seems highly relevant. If Tom doesn't have that information, I will ask him if that would be relevant to him, and maybe we can discern that. Ballpark, you think it's 50-50? 50% of the time you're going to drop on open and it's going to rebound? We'll look at it. We'll see how it technically plays out as we were to look at it. The question is going to be, that's fine. It's going to drop and then just rebound on open. I see. What about if it drops and then it drops and then it rebounds? Okay. Does that compromise the overall possibilities the same as, well, would we just rise versus and recapitulate versus would we rise and then rise further and then recapitulate? Does that already turn your odds into a 25% gamble on the open? You see, instead of just a straight drop into recovery, we have a further drop and a partial recovery, or a straight upside, trajectory to the upside with a full capitulation, meaning longest play on the easy drop recovery or pop capitulation, 50-50 odds, okay, versus the drop with the further capitulation into a partial recovery. Does that, there you go, that looks okay. You guys see that in play? Yes, that's on Bitcoin. So does that compromise the quick and easy that was laid out yesterday? Well, guys, on the drop, do you want the position on Tesla or NVDA? Bam, bam, it paid today very well. But does the notion that it could drop and then drop further and only partially return, does that throw you at a 1/4 odd? And what else can you think of? Okay, what else can you think of in terms of participation that might even make your chances less than 25%? Now you're talking. Hold on, we went from thinking right out of the gate that was maybe we just have a 50% chance. Well, let's explore and throw into the equation that we might have a 25% chance. And there below, we might even have a lower percentage chance than that. What can the market do to frustrate you even below a 25% chance on open of participation? You're starting to think. It's a good thing, right? Always, always think of the other side of the coin. Always, as you look at a pattern that's telling you, I do this a lot, you know this. If we look at Bitcoin, everybody wants to know where she's going. Everybody wants her to go up, right? What do I say all the time? Instead of looking at, well, this pattern says we have a 70% chance of going up, or a 65% chance, particularly if it's a 60% threshold probability of patterns, I always look at it and say, well, okay, you got a 65% chance. I want to do a deductive reasoning, especially if there's conflict in the probability equation. I want to say, okay, if we've got a 65% chance of going up and another pattern telling me and a target framework a throwback or otherwise, a 65% chance of going down. Look, you want to grab onto the correct 65% chance. You need to hold on to that 35% chance of the market doing, if you are in conflict, okay, based on back testing, you would need to hold on to that 35% chance that it's going to go up and do what you want it to do. That is a much more protective function. Much more of a protective function in terms of your operation in the market based on probabilities. You got it, right? For the ones who can do that, hey, you're doing okay. How are we doing on that volatility on the 30-minute on Bitcoin? Jeez, we love these patterns, don't we? You betcha. Who got scared? Nobody. Nobody. What makes it look easy? The last 40 years of information pertaining to the markets as we know them. Period. You got it. You got it. What is our current level of interaction and challenge? The cap line. Now, if you are trading these for the first time, allow yourself to be talked out of being long on this one and every other one of them. Just do it. Trade 500 of them. We have VIP that have traded 500 of these, or 1,000, or 2,000, or 5,000 of these. Yes. Ask them if they were long here. Just ask them. If this is an opportunity zone and they decided to be long here, just ask the ones who traded 1,000 of these. True, if you traded 1,000 of these, how many of these do we see? You got it. The vast majority of these we see recouped to the top side resistance. But you said we had a resistance? Yes, we did. Lower and below. And this is actually a 20 moving average that we're crossing over on the 30-minute. Difficult time frame to start with. Friend or foe, 30-minute. We know that, right? We hit into that. A little bit reminiscent of NVDA. We'll take it, huh? We will take it. Completion, over completion, down below that 100%, but we see that nice turn. Look at that, it's a 1.272. It did it, huh? Same like NVIDIA last week. Nicely done, 1.272. Were you guys ready at the 1618 at the preceding level of support? Preceding pivot? Boom. That 1618 would have been the equivalent of what occurred with NVIDIA last week. It was a sweet move, technically speaking. Nice move. Overperformance of the 100%, overly aggressive, more volatility. Orders were waiting. What do we hit in terms of just a general retracement? Let's look at a general retracement. Let's look at the 5-minute real quickly. In terms of a general retracement, I'll clean this up in 1 second. Let's take a look at where we hit into, so we can note right into that 786. Okay, right into the 786. Let me see if we hit up into almost onto the classic 86. Almost. Let me make sure. Let me actually bring this down into this zone. Here we go. Here, borderline 786 on the wicks versus the actual lines. So nice to see this. The best thing about these in the world, I'm not going to say the best thing about these, and how to really get through this, this mix that you will see in terms of expanding volatility. I won't necessarily give away the secret. How about that? I want you guys to trade them. I'm not going to give away the secret as to when and why and how this BAM decides to roll the upside. If you've traded 500 of them and you still don't know, you let me know. You let me know. If you don't know the secret as to when this thing will flip around and cruise to the upside, you let me know. Good morning, J Mac. Streaming ongoing. Boom. What's up, J Max in the back on Slack? Boom. We will look into speeding up and maybe, I don't know, making a bit more private our streams. Maybe we'll dedicate the external source of the stream. Maybe we'll just tell Tom, we cover a lot of technicals. We're just going to document a lot of this in terms of technicals to see if you want to use it in your book. We'll just tell him that while we focus on our trade group. That could be possible. Could be possible. That's all right. Tip of the hat to the guy who's done all that work. Imagine doing all that work, People just taking your information for free and no problem. We're going to use it, and I want the PDF copy, and I don't want, hey, well, tip of the hat to Tom. Who knows? Not a bad way to look at involvement in the market. So if you don't know the trick to these, you let me know. You certainly know the risks involved that these can pour to the downside, especially on a micro pattern. We're seeing the surprise element, just how we started looking at this as a comparative to NVDA. You got it. Oof, something else, huh? That's something else. Up and over on NVIDIA on the 5-minute, attempting to, can she pull off a return to 0.47% move to the upside? We know that 50% is going to be a higher degree of probability. We did increase on our momentum on the 5-minute. We did retouch nearly that cap line, the blue cap line there. RSI stochastic, MACD, and where are we at on NVIDIA? Man, you bears want to get paid. I know you bears want to get paid. It's all right. It was a nice pickup. You see, we're just in flux here. In flux. Let's see what we got on the 4-hourly, on the daily. Have some nice trades this morning. Key, point, under, bearish, over, bullish. Get an idea of what kind of work it took this morning just to assess a proper entry on a short that could have worked out or could work out to be a really monumental short entry on a bear flag on the lower time frame as you're looking at a potential target to the downside on NVIDIA while the NASDAQ is situated as such in the form of a descending triangle. Just pay attention to, I doubt you need to rewatch it, but pay attention to the framework of mind and what's required in the terms of the work basis to come up with and differentiate or segue from your lower time frame into your higher time frame, your macro targeting, your micro technical elements, and how that can interplay and what type of an approach would be required to enter into a highly precise, at the bottom of the bell, yes. Hey, look at this. Now, who's traded 500 of these? We got to get into this. Before I say this, you hold on. You want to make sure that you pay attention to the analytical framework, yes, of the markets. How do I catch a huge trade? That's the end-all, be-all question. And how do I get a highly precise entry on a lot of leverage? How do I do this? How is it even possible? If you rewatch this stream, it's a long, drawn-out stream. It's 3 hours, but we go through it on the weekly. And to our credit, we go through it on a time, case, and point where the NASDAQ's screaming bear. True? Yes. So is it worth 3.5 hours? I bet you it is if you want to catch a big move and you want to do it on high leverage. You want one of those King Kong trades. Yes. Yeah. I bet you it's worth it. The guy who wants the King Kong trade, I bet, and I'm talking about a big move trade, requires a highly precise level of entry. And I'll tell you, there are plenty of pitfalls, aside from what we discussed. The beginning of the discussion was this stream, okay? The beginning of the discussion was this stream. There's more to the equation. As you're looking at Tesla up and over the 20 long. Down and under, what's up, J-Mac in the house? J-Mac, California in the house. So J-Mac, we had a good discussion this morning. If you're just getting around to, maybe you're trading crypto all night, who knows? Boom, what's up, brother? California in the house. Just pay attention. We had a really good dynamic today about precise entries on macro trades. That is the #1 challenge for traders. I'm telling you, precise entries on macro large move events. We have several tactics to engage in, okay? So review it to the extent necessary. Required, no. Something you'll easily understand, yes. And something you'll see is worthwhile. Just the dynamics in play right now are worth exploring. Let's look at the required line on, we're just going to say the required line, 248. Let's just, preceding pivot needs to get beaten. Catchy, very catchy. In terms of this, make sure you look at your momentum, okay? Make sure you look at your confirmation across time frame, okay? And as we would dig into the issues, let's look at Venus on this. This is just it. This is a beautiful, beautiful demonstration. Where are we at here? Where's my bell? Rock the bells. Where do we go? I just have to redraw it real quickly. As we look at this specific move in play. Now, who's traded 500 of these? I'll just say, who's traded 500 of them would be Venus. I know she's traded 500 of them. Boom. That's a trade. Bam. In the house. What's up, Venus? Boom. Nice to see you. Nice to see you trading. Boom. 133%. That's nice price action. Congratulations on the trade. She probably knows a trick on this trade. When is this going to traject back to the upside? Yeah. Trade 500 of them. If you've traded 100 of them and you don't know, I'll give you a hint. If you've traded 500 of them, I really, really doubt that you don't know. And you know that you need some fail-safe provisions in store. What are we looking at here? Need to traject up and over. We had this on Tesla this morning, didn't we? Support, resistance, resistance, support, defective, ascending triangulation framework, didn't we? We did, we covered that. And I really want the bulls to hand it off to bears, to hand it off to bulls, to hand it off to bears, and then up and out. Right? You got it. So, congratulations on the trade, Venus. I hope you're all trading and enjoying the markets. What I want, ideally, for every one of you, for anybody in the markets, and for anybody in the markets, I want them to enjoy the market. I want them to enjoy their profits in the market. But I also want it to make sense, and something's going on. If it's not in line with the maximum probabilities of the market, I want us to participate in a sound market, one that interacts well with high levels of integrity that we can trust in terms of liquidity, in terms of technical functioning as well, that we can expect a machine learning algorithm that we develop. Next is SK Learn with Jensen. Looking forward to that. You guys know Jensen? Yeah, he's a Harvard guy. Have to chit chat, see what's going on with him. He's next on the agenda, aside from Bulkowski. Jensen. I think we'll look into him. Already have quite a bit. A lot of cool stuff going on with machine learning. He is an authority. So, guys, pay attention to your momentum. Don't get caught sideways with lack of confirmation. Focus on what? What do we focus on? Maximum probability trades. Focus on them. If you didn't trade at all this morning, if you literally looked at the open and just, well, it's just for survey purposes only, cool, fine. If you found a maximum probability pattern and you decided to trade it because you want to trade 500 of these, and you want to see what is this all about, huh? I'm just going to tell you guys, if you did that and just took this trade, congratulations. Now, I know you all like to hammer into a whole host of trades. Watch that hourly 20 moving average on Tesla, right? Near hit 2 times, okay? Watch that rising wedge. Expressive right now, that rising wedge is in flux with an upside target. This is not the framework where we would like to say we're going to get to our target with our upside target with a bearishly formed pattern. It's just typically not what we're looking for, guys. You know that. To that extent that we could have a defective cup and handle express itself, we will say, okay, that could get us to our target. But the target is not a blind point and shoot and hit. Shout out to Venus again on that trade this morning, 133%. Boom. Nicely done. That's the way to trade. 5-minute pickup on the 20 moving average on Tesla. Pushing, momentum dropping. How's momentum on that? Let's see how momentum has played out on the, we're seeing this, guys, some degree of, as we were to look at this expression to the downside, momentum flipping on that specific 3-minute. Just understand you can have divergence on momentum. You guys know that? You can have that divergence. When you see it, note it. The 4-hourly can be pesky. You know this. NVDA. So she's making the guys work. Is she or is she not? She's making the traders work just a little bit in terms of the potential for getting You think this is work? Try doing it for a week, 2 weeks, 3 weeks, 4 weeks. I mean, come on, guys. Looking for a short across the top? You got it right. What was sweet, guys, on NVIDIA on the top? Who nailed it? I was going to say, what nailed it? Okay, boom. Now, not the exact top, but that line killed it on NVIDIA. Take it home, print it in the paper, solid as a rock, boom. Nice. That's super nice. That is making the entirety of this effort we discussed today and this morning on a set underneath. That is a level of precision, my friends. And push up, yeah. Problem, boom. Problem, exact, bam. If it were as easy as 1 1/3 chance, you got it, we're on it. We probably had a few additional chances in here, right? So there are ways of complicating or accommodating such multi-variable hits into, but we'd love to see that. Appreciate that. Please, if you can't appreciate what this is on the macro of NVIDIA, well, that's a big deal is what that is. It's a nice thing to see in the market, some conformance. Again, we do a lot of machine learning. We do a lot of it, guys. Half of this year was dedicated to machine learning. Literally, development, me personally in machine learning. We know this. I don't know many other people who can say that. So we're fortunate enough to be able to say that. And yeah, just thank everyone, dev partners, etc. Everybody. Thank you, Venus. Boom. Way to trade. Way to trade this morning. That's on, that is on, and these happen every day, 133%. They happen so frequently, it's not that we don't pay attention to them, but we just know it's going on. It's going on like that. Way to trade. Nice volatility expression on Bitcoin. Yes, we hunt these down. Yes, it's what we want in the market. So as we look at the residual of the day, I just want to reframe into, and something, how can we not stand by this as we're looking at this on the NASDAQ? Guys, the NASDAQ comes into play for even Bitcoin. It's the tech sector. Okay, so we look at and have looked at for, guys, a long time, the NASDAQ. Okay, if we don't push stock exchanges, we don't push involvement with, we've mentioned interactive brokers a few times. Go get your training education from them. If you work on trading options on these, whatever you get into, you deal with them on that, okay? Period. Disclaimer noted. But as we look at the opportunity to and necessity to analyze something that's nearly or well correlated, i.e. the NASDAQ, okay? As you're looking at the NASDAQ, understand tech sector index USA, understanding Bitcoin correlation or not. Most of the time we think yes. So we're looking at Bitcoin having front run this move, which essentially on the weekly is very evident because the NASDAQ has not hit its underside target, which is what? Which is that lower Bollinger Band, right? Okay. So as we're looking at that fact, just appreciate the correlation between Bitcoin and the NASDAQ, necessarily incorporating that, and just the fact that NVIDIA and Tesla have had some pricing events and some volatility that has just literally rocked the last, guys, number of decades. Was it set records for the last 5 decades itself? It's important, right? NVIDIA added more in one trade session in terms of market cap than I believe any company in the last number of decades, right? Preceding flat top. You don't want to get too aggressive or creative with these. At some point you're dealing with a really, what would we see here? We're going to see this. What do you guys see when you look at this? Off the bat, what do you see? Off the cuff. Bam. Bam. You got it. And boom. True? Yes. What is that? Fan dynamic. Resistance. Flip to support. 2 hits on resistance. Flip to support. 2 hits on resistance. Flip to support. 2 hits. Flip to support. Possibility for a launch. Fan reversal pattern potential in play after some expanding volatility defectively noted, but we're a little bit aggressive on finding these expansions of volatility, support, resistance due to last week's A little bit wild action on NVIDIA. So finding patterns, ability to trade patterns, ability to engage in additional, I'll say this, as we look at the equities, we could just say as well, looking at equities for the purposes of additional pattern exploration. We could say that, right? You guys know BTCC allows to trade, but in terms of getting additional patterns, if we're stuck with a little bit of low volatility on Bitcoin or otherwise, we appreciate the opportunity to bring in, like we did on Bitcoin today, the additional. I'm just getting rid of this. That chart has gotten me over to that chart too many times. We appreciate the opportunity to bring in and look at, let's say, NVIDIA compared to the setup this morning on Bitcoin. Can an equity front run? Can the index, the NASDAQ, front run Bitcoin? As you look at the correlative chart, it does in fact do that. We have to look at the NASDAQ for purposes of correlation on Bitcoin. Can an equity, a primary AI equity or otherwise, a front-leading equity, front run or add some context to Bitcoin? It just did this morning. Last week's looking at NVIDIA just provided us a nice overlay opportunity here with Bitcoin. You guys know that. Well done, bravo. So we will continue to reinforce into the market opens, to look for additional pattern frameworks, to accelerate the potential incorporation of equities to cryptos, to Bitcoin. Bitcoin can scream to the upside or the downside. When she does, we'd love to catch it. Great compounding, leverage opportunities. Fully sanctioned, yeah, absolutely, huh? Registered with, what is it, FINRA. I mean, all kinds of stuff going on there, huh? You guys know what FINRA is? Hey? I almost said UNICEF. Check them out if you get a chance, huh? That's a good organization. Not sure about FINRA, but check out UNICEF if you can. Not bad. Now, FinCEN too. Hey, leverage fully FinCEN. Cool. Not bad. Not bad. FINRA, FinCEN, that's good. We're still speaking English. These are regulatory agencies that, what is it? Financial Crime Enforcement Network, Financial Regulatory, you guys, you fill in the blanks. I have no idea what they all are, but they're fully leveraged into great trading opportunities. You got it, huh? So these are not fly-by-night, ooh, we found this exchange. No, guys, these are the longest standing crypto exchanges that have like full credentials. We'll take it. We will take it. Do we want to call out a bottoming formation here? We can. To give full expectation to the lift as such on a double bottom formation, we can. Pulling back up into preceding level of resistance on NVIDIA. So do we want to chart this up? We can. Now what do we have? Let me eliminate the entirety of this. Do we have a curvature formation here? This is where things get a little bit difficult. We just want to call this a need to hold up and above and give ourselves that we just are lacking a right shoulder, right? It's bothering you if you're trading it. It just is. The fact that we don't have a right shoulder, because it'd be a really nice inverse head and shoulders. Truth, yes. Carving to the upside on the what? Carving to the upside on the fan formation. In question is what? Preceding level of double hit resistance flipping to support. These get more difficult when? When do they get more difficult? When you begin to see from the seat of the fan to the upside. Yeah, when you begin to see this rising, it becomes a little more difficult. True? Yes. Typically, yes. So we appreciate the additional opportunity to schedule into some more volatility, and to the extent that we can have some, and again, that right shoulder would be nice. It would be nice. Anytime you start seeing a fan go to the upside like this, just be prepared. That rocket can take off, bam, or you can frustrate when you start to revisit these levels. And dare we say, beyond this level of support, which is engaging again, nice channel framework to the upside. And what we would say is that we could be having either a flag event here with this upward sloping channel, or we could have the internal construction going on of a pattern. You're always prepared for that whenever you see a Channel formation, true? Yes. Copy that. So, if I mention Financial Crime Enforcement Network, I just mention it. I like it. It's cool. I think it's fine. If someone doesn't want to be a part of it, people shy away from it. It's like, why would you want to be in a room with a bunch of criminals? You know, I don't know. Maybe some people do. But why would you want to do that anyway? Okay. Next VIP prospect. Next survey says negative. Right? Just saying. Just saying. So, level of support, attempted to engage. What else do we have? What do we got going on here? I want to switch some time frames, looking at the nice hit to the upside on that. You guys on the 5-minute on NVDA. If you're trading NVDA, you've got it laid out. We're not hopping back and forth between Tesla and NVIDIA. You guys are just trading like nonstop. We have that frustrating element here in terms of the rising wedge on Tesla. You got it. 15-minute capitulation beyond level of, let's say, that 20 moving average. The heart of the matter for Tesla on the larger time frames is this key level here. Let's get down to it. Let's try. The daily hit into that target perfectly after the set underneath. You had to say, I don't want that trade. I don't want that trade. I do not want that short. Bam. I don't want it. No, I don't even want to enter an order with a stop on it. I just don't want it. Right? You had to say that before it paid to the downside. You got to say it. You have to say it. If we're down below the 20 moving average on the weekly, you got to say it. I don't want that trade. Let them take it. Let the bears take it. We need confluence. We need confirmation. Yes. If you hunt down the reasons why you don't want to take a trade that you didn't want to take anyway, how many times are you going to find confirmation for your side of the exclusive facts that you focus on? Probably the majority of the time. Well, I found confirmation for exactly what I wanted to do in the market. That's easy. You can do that, right? Indeed. Key consideration, I say, is the 1 hourly right now. Looks like it's clearly enforceable. We'd like to get down to that cap line. You got it. Looking at the, look at the 4 hourly on Tesla already. And we're in a bit of just a holding pattern. I think we're going to agree. We're going to see if we can pick up on this level of support. I understand it could be constructive. Let's let the day unwind just a little bit. Let's see what that bear, you guys know, we talked about that bear, making this a little bit of a longer stream to listen to. You don't need to rehear it, but if you heard it, it was good in terms of the approach for capturing or entering into a micro pattern that turns into a macro powerhouse play, right? Potentially. So looking at the framework here, bear flags getting to be a long channel. Yes, it is. We start to hunt down flat tops, start to hunt down different differentiated patterns to give us an expectation within this centralized framework. Underneath that centralized dividing line, that midline, okay? What gives you the heads up that the lower time frames are relevant? They're always relevant, first of all, but to the extent that we're looking or hunting for a perfect equation. You have a perfect entry right now if you wanted it. You didn't have to take it. I know a bear or two that would want it. Boom, on the weekly. So that weekly's giving you on NVIDIA the heads up as you're looking at the NASDAQ with a potential flag in play, yes, but also just the screaming patterning of the NASDAQ. I showed this to the Morgan Stanley, head of the office here at Morgan Stanley when I was working out last week. And I showed this to him, and I'm like, he's like, oh, you know what's going on. And I'm like, thanks, man. I was like, thanks, man. But then I told him the expression, I'm like, yeah, but you know, I doubt that you guys are looking at this the right way. Just make sure in your office that you're plugged into this, okay? Because then I said, because this can get really uncomfortable down here. And he's like, oh. And I'm like, yeah. It's like, so I didn't know how he really meant, oh, well, of course you know what's going on. He may have just said that because I had already mentioned some plays that worked out really well that he decided to miss with his office. And, you know, he's a good guy, nice guy. He's the head of the office here, running the office at Morgan Stanley here in town. we don't give each other a hard time. Very professional, very nice guy. They offered me a formal, you guys know, a formal trading position at Morgan Stanley, and it was something that I'd turned down, but a formal offer nonetheless. So I keep on good terms with them overall, and I like to respect what they have going on in terms of technically or otherwise. So I brought this to him because we know what these patterns do and what they do exactly what we just saw, and it's great. And Venus, you can appreciate this after your trade this morning. Great trade, bam. Okay, 133% Venus, what he traded this morning. But what's great about these patterns and what's difficult to recognize is the most uncomfortable situation in the world. It's just like, please, like, are you kidding me? It's down in here. Right? If we can get this down to the level of support, first of all, it's projected and not unlike what we're seeing, this carved in level of support here. Now it's a long way from the eye on the prize is far down here, guys. All right, this is quite the trip. But to look at it, because we know one thing, at this level here, everyone is running for the hills. You know this, it's Armageddon time. True, huh? It's sign it off. I may help people sign it off in this point, who knows? But with the understanding what? Well, the biggest surprise comes if and when we can return with what degree of probability? You got it, huh? I'm going to put 75 to 85%. Yeah. Boom. So your profit equation becomes a return to that topside resistance if we don't get a blackjack. That's proprietary information. Blackjack, for purposes of review, hopefully by Bukowski. Looking at the framework, this is where people just will absolutely give up on the market. How do we know that? Well, they did it on Tesla, didn't they? Yes, they did. Did we? No. What did we do? Hey, VIP, what's up? Hello. When? During this moment. What was everybody doing? Giving up. Completely giving up on Tesla. That was the low. Bam. So it takes an incredible amount of fortitude and discipline to project these, pay attention to them, to keep them on your screen and not listen to. I'm telling you, on Tesla, on Tesla. It's Armageddon. It's the end of the world. It's the rapture. It's over. You know that. So if we get into this possibility here, and we have several pickups in terms of a bull flag, in terms of a lot of bullish components here, but just pay attention for this. Because the move from here to here, or from here, to here, is huge. And we just saw this morning how to schedule into the micro elements as, yes, the micro elements as they're expressing themselves into the componentry of the macro dynamics. And you may need to flash trade and carry trade. If you have flash trades and you have carry trades, yes, you're going to be executing multiple trades. Clearly, you got it. So just understand what we went through this morning, understand the dynamics in play, understand the framework of the NASDAQ right now. It's not sitting pretty unless you're a bull, unless you really would like to get in, and it's going to be interesting. Who thinks it's going to be hard to stay off this line? Who thinks it's going to be hard? Depending upon how we close today, who thinks it's going to be hard to stay off of this line? It should be challenging the market to at least assess that question heavily. 23.6. Now, technically speaking, per New York Institute of Finance, this is going to be tough. Support line dynamics, and what's the one saving grace right now is the equivalent pickup, which is literally ongoing at the preceding level of support. So, tag it, mark it, preceding level of support. This is what we wanted to see on NVIDIA, right? So I complained a little bit, right? But we wanted to see that preceding pickup level here. So if you're on the wicks, you have a candle set under, yes. Just assess the technicals we applied to Bitcoin, okay? Look at the specific to the left, boom. That's your pickup. Yeah, that's money this morning for bulls with a degree of caution. You got it. But that's the save routine on this pattern not hitting the 23.6. Where do you want to short? Where do you want to short? High as you can, guys. Where do you want to long? As low as you can, right? Plenty of room in between. We agree. We agree. Looking at your momentum, notice the bull or bear here on the different time frames. We put this on so you can see. It's jumping out at you. Bear, 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 bull. Bear, 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 bull. Okay? I put this on here so we'd have a continual reminder based upon the time frames we're looking at. You know, I'm not going to do this except for once. Literally, it doesn't look attractive in terms of the layout. But you understand, as we look at something, what's going on. Yes. You have confirmation for a long. You're going to hit levels to the downside that are going to engage, right? We're going to the downside, so you'd like to engage. What were we in? We were in a, what is this, guys? A rising wedge. True? Yes. So this is just, I've made them this big so you understand that they're there, right? I can work on the design. Shout out to Lucas again for Switzerland. What's up, Lucas? Switzerland, dev team in the house. What's up, Lucas? Nice to get the message from you this morning. It means a lot. Thank you. Looking forward to, and I'm going to change this back, right click and apply all, but understand those little red markers, those green markers. Yeah, they could look a lot better, huh? Particularly, huh? What do you guys think? They could be designed out, huh? I'm not going to be the guy the guy with the magic touch on the design button, but you see that in play, okay? Understand that momentum to an extent it can front run or it can lag. Okay? This is Tesla looking at a frustrated line pickup here, looking at a descending wedge dynamic, looking at what else is on the map here immediately. Everyone's going to see the descending wedge. What are they going to see? Breakthrough topping formation, right? Accustom yourself, find the pivot, boom, to the downside. That's in play. Okay? Just accustom yourself. Anytime you see any topping formation, draw the line. So you're not just caught trading one specific pattern, right? And that, let's just see, level of support almost still in play, frustrating along. Not ideal action this morning in terms of bulls. Just keep an eye on your momentum. Dare I say even on the lower time frames, right? And in terms of the expression of your momentum, you have to look at it in terms of cyclically. What is it? How well is it operating? First of all, this was, several bullish moments here. Really capitulated on the hourly, but how well is it structurally? Let's say assembled in terms of cyclical interaction with the price line. Okay. Important. Like, take a look at your 15-minute. What's it really telling you in terms of it's bearish? What's it really doing? Okay, hit and miss, right? Consistency, hit and miss, right? It's not supposed to be easy, or it arguably wouldn't be worth it, right? We're trying to see the pickup on, and Tesla acting a little bit stronger than NVDA on the weekly. We get that, huh? Tesla, a little bit stronger. They've been playing coy back and forth. Tesla versus NVIDIA. Take a look at your weekly. And yes, Tesla is outperforming based on the weekly NVIDIA thus far. This is a difficult pattern just to say, well, I'm going to hammer into this. I am going to hammer into this with the saving grace that you are at a preceding pivot to the left on your let's just say on your hourly, right? Or your 45-minute on the lines. Well, okay, well, I took a chance, preceding pivot to the left. I just want to say, in this, you couldn't catch the bottom like you have on the NASDAQ. Very nice. You caught the bottom, literally the bottom, looking at a preceding pivot. That was my complaint on this chart. You guys understand? That was my complaint when I said, well, there are lower orders, right? So the NASDAQ, to the extent arguably we're in that was a small pattern back up in here. Nice to see that still in play. Oops. Nice to see that fan. That is not applicable right now. That was applied in this zone before that launched to the upside. But as we were to see the dynamics here, we caught that bottom on the NASDAQ, and my complaint was, well, we didn't exactly catch all of the layers. This would be on the NASDAQ. We didn't exactly catch all those layers on all those lower level orders on NVIDIA. So you see NVIDIA? You see why I complain? You see the difference? We want to catch the bottom, like on the NASDAQ. You got it right. You got it right. That's what we want to trade. We want that proficiency in the market. Boom, boom. You got it right. That's what we want. Bam. That's nice. That's nice. So the reason for the complaints on NVIDIA, just technical complaints noted. Apply such certainly to your crypto trades, without a doubt. Looking at a potential breakout, you're going to tempt these bulls for a while, huh? NVIDIA. All right. I am going to, what do you see there? I'm going to point it out every time we see it. What do you see? What do you like? What do we get into? You got your screen up? What did you see here that you liked? I bet you saw, you say, well, it's a bull flag. Okay. Not exactly. And we'll tail note out of here and just, we will say what we saw is this. What is it? Expanding volatility. You got it. Rocking a bell, pattern formation, boom, to the upside. Now that, we'll take it. That's okay. That's on the 1 minute time frame. That's nice. So to the extent that we do rock to the upside here just a bit, we know what we're rocking up out of, what is the rule on a breakout on NVIDIA or anything else. First of all, what have we established that we didn't like earlier? There's a reason why I have a complaint, if I have a complaint, technically speaking. It's based on the entire historical data set that I can look at and backtest in the markets. That has been assembled for us to do so. If we were to look at the composition now of the left shoulder head and right shoulder, great. And we will rock up and out of a bell pattern to get there. But on this breakout, where are the specific orders set down below along this for a potential hit back and through? What is our percentage probability here? Let's take a look. Let's measure it. What's our tactic? About 0.8, 0.4 to the upside, we'll say, with a maximum probability being a 50% completion to the upside. So the shortcut is just measure amplitude here, take half. That's it. And before I run into lunchtime too considerably, I need to go lift some iron so I can act like a tough guy half the time, right? We'll leave you with the NVIDIA chart. Congratulations to Venus on Bitcoin. Congratulations to all the VIP traders. You guys are doing awesomely well. It's a pleasure to bring you information. This is London, former hedge fund owner, private, non-SEC, not financial advice. We will say for purposes of building, we are building, and that indicator suite, particularly the machine learning suite. Excited about digging into that in the next coming weeks. We'll talk to you soon. Guys, thanks for spending the morning with me. This is London. We'll take care. Guys, we'll see you tomorrow or potentially for close. Bye-bye.